Get in the hole. Morning. Start again. Sorry. My son was playing VR on my PC yesterday. So obviously when you put the VR helmet on, the microphone switches over to VR. I'm back. How are you all doing? Yeah, we're going to do the whole show in mime this morning. There we go. How's everybody doing? Morning, Christian, Peter, Steve, Danny, Morgan, Doug, Jerry. Morning, Andres, Keith, Octopus, Amy, Thought Feeder, Martin, Sarah, Steve. No, already said Steve. 10 ADR long in the DAX this morning. I can feel it. That would be nice. That would be unusual. But that's probably not going to happen. Morning, Lens. So news overnight, we've had New Zealand unemployment, which came out as a negative. Unemployment rate's gone up in New Zealand, which is not good for their currency because it puts a pressure on interest rates to not be risen anymore. So current New Zealand fundamentals are 5.5 interest rates, which is fine because it's highest with the US. So they're joint top. Inflation is same as Aussie, coming down at a similar rate to Aussie, but their unemployment is now on the rise. So that's negative for the New Zealand dollar. It means it's harder for them to put that up because as you put up your interest rates, your unemployment tends to rise, which is bad. So we should see some negative movement in the New Zealand dollar today. So we've got a few ADRs by the looks of things. Yeah, so all the New Zealand's will pretty much all the New Zealand dollars have hit ADR today already. All of them have. So that is negative, New Zealand, but may not be that bad. We will see. Morning, JC. Morning, John. Thanks for subscribing, Kamlesh. Welcome aboard. Right. So news-wise today, obviously we've had the unemployment figure overnight, and we've got non-farm employment change at 115. So non-farm employment change typically is a little bit of a mover, but not a big mover because we're waiting for the unemployment rate. Unemployment rates are what drives the fundamental, not employment change. Employment change can be affected by new startups, by companies closing and all sorts of things. The unemployment rate is the general problem with the unemployment market. So that is what the measure is for the fundamentals. That's coming out on Friday. This does, however, give us a clue. So if we get a big number here, either positive or negative, much different to expectation, you tend to find the unemployment rate will follow. So it can give us a clue as to what the movement will be on Friday. Unemployment claims tomorrow as well. That also gives us a clue. So these two together, if they come out the same, typically you'll find non-farm, unemployment rate will follow suit. So that's all today, but that's all we've got, 115 this afternoon. So some volatility pre-market in the US dollar. Overnight news, obviously we had the unemployment rate, which went up by 0.1%. So they were forecasting it to go up, but it went up by more than expected. So that's much worse than expected. Fed's Bostic, I expect unemployment to rise as inflation falls. So they're expecting unemployment to go up on Friday, which means they are expecting the US dollar to come down on Friday. Don't expect a rate hike would be necessary in September. So we keep getting mixed messages on the rate hike stuff, but that was pretty much it. So that was the kind of aftermarket yesterday. So no other news overnight. Nothing really from the Bank of Japan. There's nothing mentioned about FX specifically there. So we've got a bit of a weakness in the yen showing through at the moment. All the yen pairs basically undid that expected bullish move. So just a complete V-shaped recovery on those, which was great. Not something I took because I was expecting a continuation. I think most of the market was, but it completely undid. So really back to square one on this yen. No idea. No idea where it's going at all. Neither do they. So I've got at the moment a sell on the US dollar yen. So this was taken yesterday. So that's the current positions I've got on. US dollar yen, got into that yesterday. So that was an H1 M5 mean reversion with the EA. Nice level of potential resistance we're at as well. So just looking for a pullback somewhere into propulsion. If we're down here by Friday, I may well just break even and hold that because we might well get some weakness on that US dollar, which would be lovely. So just going to TP. Go for, wow, that's a big move. Yeah, let's go for it. I'm going to go for a retracement into that propulsion gap. In fact, I might as well target that propulsion gap. Unlikely we're going to hit 200 ADR today. And if this does get down to 125 ADR in that propulsion gap, I'll probably take it off. But we'll see where we go. 1 minute to the open. Crikey, quick. We're open. Blimey. Didn't look at the time. So we've got a gap down on the DAX today. There's your pre-market range. It's a big gap today, big gap. So looking for a potential instant gap fill today, but on a gap down, quite often you'll get a continuation. So as you can see, it's going short at the moment. So yeah, pretty big gap target available today. We'll see where we go. So looking at the upside and downside risks today, downside is last week's low, which is very, very close. So we're going to get some limit triggers down there. This is obviously a big gap down. What earnings have we had overnight? So we've had AMD, MicroStrategy, Pinterest, Starbucks, Uber, and Virgin Galactic. Pre-market today, we've just got Kraft. Why is none of that been announced? Okay. So obviously, one thing you've got to bear in mind is sector purchases. So if these have all had misses on their earnings, why is no earnings in here? Do I have to save that? Yeah. Sorry. Let me just refresh this. I've got earnings news turned on. Why am I not getting the earnings news? Stock market headlines on as well. I don't know. I've not got the earnings news for some reason. Weird. Anyway, so there's a lot of earnings. So we might potentially get a continued move off of this. So if this is gapped down because there's been a big stock sell-off on a missed earnings, we're going to get a continuation move today. So once this 5-minute ORB's in, or 5-minute opening range is in, we'll see where we go. But a break to the downside, obviously, is going to run straight into support today here. So this is a very good double support. So this is last week's low, and that's the previous week's low. You can see the week before, that was the range. We had absolutely no range on that week. That was then the springboard to come and put this high in. So if we hit this level again, we're likely to get a lot of buyers at this level because they bought it twice now. So they don't want the market to drop below that level at the moment. And we've got a gap fill play back to the upside. So if we do get to here, that's a really good looking buy opportunity today. I'm just going to monitor the Dow as well. So the Dow's got a little bit further to go than the DAX to its downside, because I'm looking at potentially taking a long on the Dow if we get that bounce, because the Dow will probably get bought up with the DAX. So if you're playing the ORB this morning with the EA, you're going to get a break of that 5 minute. I'd be careful if you do get a short on, because obviously you're selling straight into strong support, which is never a good idea. Obviously, if that breaks, it's a very good idea. Okay, we've got 20 seconds left. Morning XR update.news. Virginia, Marco, outro. Morning, Kenley, Franco. How are we all doing? I'll go through the FX in a minute, and obviously we'll have a look at the ADRs and stuff. What about the Finch downgrades US credit rating? How does that impact the market? It just means that they're not confident in more US dollar upside movement, basically. So it tends to be negative US, but it's not something really that impacts the market. Credit ratings basically are, you can get a spike off of them, but they tend to be kind of what we know. Yeah, inflation is coming down fast in the US. The interest rates are up at what they think is terminal rate. Therefore, the upside for the US is limited. So Finch will downgrade them and say, well, it's not a good buy at the moment. And they're not particularly good for credit, obviously, because they're having trouble paying their interest, which is, again, negative for investment. So it's just a gauge, really. It's kind of like an official stamp, if you like. Love it when you get an ORB fill with no slippage. Ooh, aren't you lucky? So if you got the pre-market today, if you took the pre-market, you've had a good 2R on that today, I think. One and a half R. So if you took the pre-market 15 today, depending on where you got in, obviously, you've had roughly 1.5 R straight down. Nice, easy, quick TP. But we are pulling off this support. So the 5 minute opening range today is obviously now in here. So if we get, that would be my preferred trade today. And it would be a hold as long as you can type thing. Whether we get there by the New York Open, I'd find that very difficult. That's 150 ADR. So we got to move 150% of our normal daily range just to get that gap filled. Unlikely it's going to get done in one session. Stranger things happen though. It's earnings fortnight. Anything can happen. So I'm just eyeing up an entry on the Dow as well. So if this DAX is going to go for the break, Dow is potentially got the opportunity to trade back up into Globex highs. So the gap fill done overnight in Globex. However, if this does break to the downside today, there is nothing to stop the DAX. Nothing to stop the DAX, really. This is part of a V-shaped move, so there's no real potential support here to bounce off. So from a downside perspective on this, you'd have to kind of look at that last monthly low there, which is 225 ADR. So if we do break this low today, it's clear space pretty much all the way down to here, 175 to 225 ADR to the downside. To get back up to the gap fill today, we've got to do 150 ADR. So there's a lot of room in both directions. Could be a big runner day today if it goes, but at the moment it's not. Absolutely no volume whatsoever. Same with the US indices, not really going anywhere. 1 minute left. At the moment, it looks like we're going to put an inside bar. So if we go with an inside bar, you've got an option if you wanted to take the inside bar break. I'll just leave it with a 5-minute opening range though, and see where it goes. I'd still be a bit worried about taking a short because we have got these levels here, which I think you're probably going to find a lot of orders at. Dow's trying to go short. Inside bars at the minute. Wow. This is a paint drying session, isn't it? Morning, Blue Trader. Today under a rain cloud. Yeah. Very strong winds in the UK today and thunderstorms. Not good. This is summer. Woohoo! We should call it winter trading, really, not summer trading. We don't get summer anymore in August. Took 1 hour on the short on the DAX. Good job, outro. Wish that I held my short on the DAX from yesterday. Yep, that would have been nice. However, if you're going to hold a short or a long on any index, be aware that this can gap the other way as well. So although you're going to get those lovely gaps some days, you're also going to get huge opposite gaps, which are going to hurt you. So scalping indices, holding long terms. Holding long term in the stock market is always tricky. I never got into swing trading in stocks. It didn't appeal to me, the danger element. This market's got absolutely no juice at all this morning. We're in danger of putting an inside bar in the inside bar at the minute. Not going anywhere. So stick with the 5-minute break. Hopefully it's a break to the upside. I'll be much more confident taking an upside break today. However, if we do break down and we scream through that level and we manage to hold below that level, that's going to be a beautiful short run today as well. So we'll see. I'll come back to that in a minute because there's no point in watching that. It ain't going anywhere. Right, ADRs. So yesterday, I didn't bank anything. The only thing I did yesterday was get flat on New Zealand CAD. Glad I did, because it's dropped. So I got flat on this. Basically, the Australian dollar news yesterday was negative. So Aussie moves with the New Zealand dollar. So I broke even on that position because it was like nearly 2 weeks in and hasn't gone anywhere. And the fact we've had negative Aussie dollar news, I was expecting New Zealand dollar to drop. So I took the break even on that yesterday. And then obviously this morning we had negative New Zealand news, which has driven it down into the lows. So if you are still in that, there's potential for a little double bottom bounce here, but I don't hold up much hope for this. We've had negative news on the Aussie. We've had negative news on the New Zealand dollar. It's not good, is it, for the New Zealand dollar at the moment? So I'm glad I got out of that, but that's all I did yesterday. Holding at the moment Euro Swiss. Looking for the Euro Swiss move up today to fill this propulsion gap, which it's doing at the minute. So I will be taking that one off today. Should be able to get 1.5% or so out of that. Took some more trades yesterday off of the extensions on RSIs. So the Aussie US took that one yesterday. RSI extension. So these are all H1 RSI extensions, M5 reversal alerts, H1 M5 mean reversion. So first entry long on that one yesterday. Just looking for a quick 50% pullback on that move. We'll scale into more on that if needed today. Euro odd long on that one. So that was an RSI extension to the upside. Obviously, the New Zealand dollar news this morning, negative, has hindered the Aussie. That's gone up further. So nice, big, strong move this. So this was a beautiful, what did we finish on? 298 off of a 181. So it's 150 ADR. Nice, big 150 ADR. We are doing an inside bar on an inside bar. This is a 2IB setup this morning on the Dow and the DAX. Yeah, so open, inside bar, and then an inside bar on that previous inside bar. It's called a 2IB setup. And it's basically on a lower time frame on M1, you're looking at a symmetrical triangle formation, which is a contraction before a break. So we obviously don't know which way it's going to break. So, but it is indicative of a fast, strong break. So watch this morning. This could go quickly. At some point, someone's going to make a move. Basically, the buyers and sellers are in equilibrium. There's exactly the same amount of buyers and sellers coming into the market. At some point, some big fish is going to go, screw this, and they're going to whack a big order in and it's going to pop. So you could look at that candle now for a break instead of the opening range. That is obviously safer. That's going to be potentially, sometimes on these, you do get an outside bar formed where a break is started and tried. They sell that break and then the sellers get bought back up again. You get an outside bar on an inside bar. And that is still absolutely no idea which way it's going. It's basically no one's looking to go long. No one's looking to go short, basically. We're stuck. Okay, so we're not a 2IB now. We've just broken to the upside. We are, though, on the Dow, look. Dow has done 2IB. But then, again, we're not trading the Dow. We're trading the Dax. I'm trying to trade the Dow on the futures, but I can't. Can't get an entry. It ain't moving. So yeah, got in short on EuroOdd. That's a really nice 150 ADR extension, RSI extension as well. So RSI is extended. First entry was this morning. There. So that was the reversal alert, that candle there. So that was your reversal alert this morning. And then we pushed down and immediately we've pushed up, invalidated that high. And we're off. Nice M pattern going in at the moment. So potentially next reversal alert is going to be, oh, in a reversal alert, you just had it. So there's your M pattern, there's your retest. So potentially that might come down from there. Euro Swiss, I'm already in. Pound US dollar, got into that, was it 2 weeks ago? Just shows you how slow this market is at the minute. It's been sitting in this for 3, 4, 5, 6, 7, 8, 9, 10, 11 days now. And we've moved down to there. So in 11 days, we've put in 176 pips, which is 150 ADR in 11 days. It's just not going anywhere. Break's gone to the upside. So long on the DAX. Right. So let's see if we can get this move in on the DAX to the upside. Would be nice. Still no break on the Dow, but I think that'll probably go in a sec. So yeah, pound US dollar in long. Since I took that second entry there, we've gone sideways for 3 days. We're just sitting down at the lows at the minute, bouncing around. So this is going to move on Thursday, hopefully upside. We should be getting an increase on the interest rates on the pounds. That should be bullish for the pound. I'd love for the US to have negative news today. That would be lovely because that will give the pound a start before we get to Thursday. So Thursday, tomorrow, is the interest rates for Bank of England going up to 5.25. No reason why we shouldn't get that. Should be bullish US. And if we can couple that with a negative move on the US this morning, that would be lovely. We've had the CPI for the Swiss this morning. Oh, sorry, that's tomorrow morning. Yeah, I was going to say. That's why the market's not moved. That's tomorrow morning. And then obviously tomorrow afternoon, we've got unemployment claims. So there's going to be a lot of movement on this pound US tomorrow. So I'm not expecting a lot out of that today. US dollar yen I got into yesterday. First entry up there. That's in profit at the moment. And Euro New Zealand. I've just entered short on that one. So Euro New Zealand and Euro Odd are pretty much the same trade. Big, strong 150 ADR push. Big, strong push this morning. Nice resistance coming up at the monthly high, potentially for a bounce. Limit orders will be sitting up at that level there. So this Euro New Zealand and the Euro odd, obviously, if you look at the two, they're very similar moves. So in both, waiting on them at the minute. Market seems to be rejecting that high at the moment. So we'll see if we get a reversal. Dow, there's a lot of selling coming into the Dow. Wow, Dow hasn't actually got out of its open yet. Look. Yeah, not going anywhere, is it? Are you in New Zealand on a Swiss buy trade? No. Not extended enough for me. Last buy on that was there. Had one there and one there. But there's no reason to get into this. It's just sideways at the minute. So actually, there is a reason to get into this. That bottom bounce, basically. That's a pretty good trade, actually. I'll take that. I'll tell you what I'll do. I'll take that on the new compounding account if I could find the right MT4. There we are. New Zealand dollar Swiss. Half an ADR is 280. Let's go 400. There we go. So buy stop above the high of that candle. Stop below the lows. So if we push today and trigger along, that's 1.5 R. Well within the range. Right, no, yeah, 2.5% risk, yeah. So yeah, like look at that as a long. Give it a go. How big is the max recommended opening range for the 5-minute ORB on the DAX? Up to you. Whatever you fancy, really. I mean, the research that I'm carrying out at the moment is indicating that you don't want to get in. I mean, there is no good or perfect, if you like, opening range. So so if you look at some DAX opening ranges, yeah. So this is a big one. So for example, ADR is 2441 on this day. The maximum range I'm selecting is 439. Yeah, so that is, did I use 0.18 or 0.2? I can't remember. 439. 1 is 0.18. Yeah, so I'm using 0.18 or 18% of the opening range, basically. Roughly 20%. So what I'm looking for in an open is the market not to have put too much volume into the open so that it's actually got some volume left to make a run. Yeah. If the market, so we know that all markets move within an average daily range. So the average daily range of movement on the DAX at this point in time was 2441. If it puts in half of its average daily range in one 5-minute candle, there's two problems. First, let's say it went up to there, right? To get a break on that, let's say the 5-minute opening range did that and then it stopped in the middle. You've got a long way to go before you even trigger a trade. Second, when you trigger that trade, if you're going to use an opposite range stop, it's a hell of a long way away. So your TP at 1-to-1 is going to be all the way up there. So it's got to put 2/3 of its actual daily range in just to get you to a 1-to-1 risk reward ratio. Pointless. So my reasoning is, if you use a range which is smaller than 20% of its normal daily movement, to get 1R is pretty easy. To get 2R, not too difficult either. Because to get 2R, we're only saying we want you to move 60% of what you normally do in a day. Remember, the market spends 58% of its time within its average daily range, but it could be any area within that average daily range. So if we use 20% of the maximum of the average daily range as our initial opening range, it shouldn't be too difficult to hit a 2R. This one hit a 3R. Yeah. That's the only logic. Whether it's right or wrong, there is no right or wrong. If you flick through some of these opening ranges, you'll see some of them. Look at that. So that was 383 max range. This range was actually 600. So this was pretty much 40% of its average daily range in one candle. Look what happened. Yeah, that's the 5-minute ORB, the 5-minute opening cash balance. The thing couldn't go anywhere. It had no legs. Couldn't. It's done it all. Everybody's dumped all the stock at the beginning. There's nothing to do now, is there? But go sideways. The algorithms just take over. These are the days we buy the lows and sell the highs. We do range-bound trades. So, but if you look at some of them when they break, so there you go. That one, that was over 20%. So 347. This actually put in 441, more than 20% of the range. But look what it did. Did a 3R. So some days it will go anyway. Yeah. But it's a bit of a messier open. When you put a lot of volume in at the start, the open is messier. So those fast, hard breaks that we like to get with the ORB don't happen as much. But there is no right or wrong. Yeah, I'm doing a lot of testing on this strategy in a lot more detail. There you go. So this is a green range, 351. So this one is green, not red. So 351 is 20%-ish of the average daily range. This put in less than that by quite a long shot. Yeah. Look what happened that day. Because we didn't put a lot of volume in there, the market had a lot of volume to spare. Yeah. So this was, that's 5R. So what's it? 6, 7, probably about 8R. Straight up. No stopping. Because the range was small. The market had momentum available to it. So that's the reasoning behind it. And that's the testing that I'm doing. There you go, big range. But look at it, 384. That did 781, 718. Huge. But it still managed to do a 4R and smashed through yesterday's low, you know, so, and continued on in New York. New York continued to move after a small pullback. So there are going to be days where you put these big ranges in and they still work beautifully. But I'm looking for the norm or the average so that we can get a better understanding of, right, when we've got these big ranges, more often than not, this is what happens. And if it's bad for an ORB, we won't take an ORB. Doesn't mean we can't trade it. There's other ways to trade it. When you get these big ranges in, we wait for a retest of the high of the range. And if we get bearish movement, we'll short that. But we'll take a short down to the low of the range, because if we're going to stay in rotation for the day, we want to be buying up those lows. If that fails, fine, we've made that. Yeah, so there's other ways to make money out of it when we've got a big opening range going in at the cash balance. So that's the research. That's what I'm doing. And as you can see, I've got charts coming out of my backside with every permutation of the strategy. So homework for me. Dow's broken short. Dax hasn't managed to do anything. So Dow is short. So short's down to yesterday's low. If you are interested in the Dow in the mornings, I'm only trading the Dow in the mornings, and I'm only looking at this because I'm trading futures and I haven't got the DAX available to me. So I'm using the Dow as the DAX surrogate, if you like. But we're not getting anywhere in this DAX. It's just dead. I don't know why this is dead. I think this gap's screwed it today. But if we do get a move, I think we're going to get a biggie today. But here you go. Look, I mean, 309. Yeah, so 1719 is the current average daily range. We've done 500. So we've done nearly a third of the range already today. That's a big candle for the DAX. Hence, there's no momentum because we've put it all in the 5 minute. And these are the days you want to take those pre-markets, yeah? Like Outro's made a 1R on the pre-market break. Those are the days you want to take those. However, we don't know, do we, until they've happened. Doesn't help us. So we're breaking short on the DAX, looks like. So watch this break. If this goes below that, I think we got a flush today. So we will be looking for gap fill plays for the rest of the week. If it breaks down, obviously. But at the moment, it's not doing anything. New Zealand dollar Swiss. We just looked at that, didn't we? How big is the... I've just answered that. Morning, great. Right, so let's look at the ADRs. So Aussie, New Zealand. So bear in mind, New Zealand dollar, obviously, we've got some weeklies as well to look at. Weekly ranges here. It's only Wednesday, so these all mean reversion opportunities as well. Nothing on the monthly because it's second of the month. So Aussie, New Zealand, this is an ADR hit to the upside, but if you look at the 5 minute candle at the swap today, yeah, this is my broker being funny. No. So that's where we opened. We got this huge spike down for some reason about an hour into the open. So whether that is actually an ADR hit, I would question. So that's the news on the New Zealand dollar. This was some kind of pre-market move or dump. So I would ignore that one today. It's only just hit, but it has come off the highs. So if you did take the reversal alert on it, that was your reversal alert there. That was your retest. So there's your M pattern push back down. I'd look at some movement back down into that propulsion gap and get out somewhere in there. Euro New Zealand. Again, a little bit of a spike. So there was a pre-market move on the New Zealand dollar before the news came in. I'm short on this one, but this is an H1 M5 mean reversion. So that's, have I just got into that? Yeah, this morning. So that is the H1 M5 mean reversion, also an ADR. We're retesting at the moment, so that's potentially the M pattern going in. Haven't put a target on that. That 86. It's only half an ADR, isn't it? It's going to take a big weak euro move to get down to there. But I'll target that initially, and I'll see how we go. If we get into this propulsion gap, because this is the accumulation out of the back of yesterday, so this is this morning's news move. Highly likely we'll retest that news, but we might well get the bounce there. The euro is should be bullish. We are extended though, so I would look at that area. That's only going to be half an ADR of movement, so it's kind of like a little ADR scalp into there. That propulsion gap there is kind of the ultimate target, but that's not a very good propulsion gap because there's no accumulation before it. Yeah, a good propulsion gap will have an accumulation and then a break. This is part of a V-shaped recovery, so it's just a strong order that was put in during that leg up. So it's not the best of propulsion gaps. That one is the end of yesterday in New York's accumulation and then the news. So that one is a much better target to use. That's more profitable, obviously, but I'll have a look at that when we get back down to it. But it's a nice looking little short there. Pound New Zealand, same trade basically. It's an ADR extension to the upside. Pound is bullish. So your reversal alert is about to go in. You probably had one actually. Yeah, you had a reversal alert there. So that got invalidated by that high, and now we're putting in a lower high at the moment. So if we get that reversal alert there, pushing back down again into the news. we got a nice resistance on this as well. This is a good contender for a support resistance bounce play. So this is a monthly high, previous monthly high, last week's high, tested twice. Yeah, so this is a very, very, very good resistance. However, we've got the interest rate for the pound coming out tomorrow. So if I try and short this today and we end up sitting like this for the day, what we're going to find is tomorrow I'm at the mercy basically of the news, and the news will either stop it out very quickly or make a lot of money. I'm expecting a rally off the pound tomorrow. So it is a very good short contender though. So I've already got leverage on the New Zealand dollar once here. I've just entered long on that New Zealand dollar Swiss entry. So there's your reversal alert. Yeah, there's the retest. So long, looking for play up into ADR. Pound New Zealand is obviously the inverse. 74 is terrible at updating. That would be your entry. I wonder if we can get a quick scalp out of that today. Half an ADR. I'd have to use a quarter of an ADR as a stop, which is 51 pips, which is 125 ADR. So that is kind of a got to be in and out fast. Not sure about that. Leave that one for the minute. But that is a good ADR reversal opportunity. I'm just not convinced about that because of the news tomorrow. If it doesn't play out, I don't want to be stuck in a trade at the mercy of the news. New Zealand dollar CAD, double bottom after the monthly. So RSI is a little extended on that, not a lot, but that's a nice looking ADR reversal. Drop down M5, your reversal that's just gone in. There's your W pattern reversal, push up back into news. New Zealand dollar yen. So you're just about to get the reversal on this one. You just had it as well. We go. So there's all your ADRs. Your weeklies, Aussie dollar Swiss, extended to the downside. So on the weeklies, obviously, this is Wednesday, that is Monday. So that high down to that low is your weekly range hit, 106. So look for a push back up on that one. Bear in mind, obviously, you are long against the Australian dollar, which has just had negative news, and New Zealand's just had negative news, both negative. The euro and the Swiss franc should be bullish, negative. So you are pushing hard against fundamentals there, but it's got to pull back. It's got a profit take. So there's your target to the upside if you want to take that one. It's just about an RSI extension as well. So good looking opportunity for long on that one. Aussie US extended to the downside. Got a buy on that one already. Looking for a 50% pullback on that move. That is your weekly range as well. So down to there, 1730. 169 is your weekly range. Euro odd is extended already to 125% of its weekly range. As you can see, we've had a 1.5 ADR move to the upside and then a continuation push from there. So be looking for a second entry on this one. Going to need more movement than that though. It's going to need to be up at ADR today before I get into a second on that. So that's very nicely extended. Pull back down into propulsion. So be looking for 150 ADR as a target to the downside on that. Euro New Zealand extended to the upside. Again, we've looked at this one just a minute ago because it's an ADR hit. So that's also a weekly range hit as well. Nice monthly resistance coming up. And pound odd. extended to the upside. And again, all these pounds are bullish, yeah, bullish pound at the minute. So anything you take as a short, you're counter trend. Just remember that. So targets are a little bit tighter. So a good opportunity for a mean reversion play back down into there. Anything you get into today, though, literally you're at the mercy of the news at 12 o'clock tomorrow. Whatever happens to that interest rate, it's going up or down fast. So anything you take today, either you need it protected or you need to be out of it tomorrow. This market today is shocking. So we are trying to go long. I'm going to scratch this Dow. $375 loss. I've basically put a stop above this high of this candle. This isn't going anywhere. And if that's not going anywhere, that's not going anywhere. So either this is going to break down or it's not. And this is going to break up. I think this is a much nicer long than a short. But at the moment, it's just got nothing, is it? There's nothing. There's no one there. Where are they all? All on holiday. Virginia, isn't the opening range driven by corporate buyers and sellers placing orders? Yes. And after that, the speculators speculating, which are different types of traders drive trades that drive the market. Yeah. Correct. But speculators will be in on this as well. It's just an influx of orders. All we're doing is we're filtering out with the opening range, with the initial cash balance. We're filtering out the top, if you like, the confusion. Yeah. So in here is everybody placing orders. So what we're trying to do is we're trying to filter out the corporate orders, the commercial orders, and wait for the speculators to take control. There's no speculators today. Just not interested, are they? So that's basically what we're doing by using that initial range, is we're just waiting for the initial oomph to be gone so that we can get a clear picture of where the market is trying to get to today, if it's trying to get to anywhere. But there's a mix of orders in there. So everybody's in here, and people will be getting in. Don't forget it. Like in the pits, as I've said before, with the open outcry, at the open, speculators are jumping on board, hoping to catch that 50-50 shot. Yeah. So you can flip a coin, walk into the pit and go long because it was a heads, and 50% of the time you'll be right. If you're right by 3R, and every time you're wrong by 1R, you're going to come out of those pits with a profit. That's exactly what that is. Yeah. That pre-market movement. But the aftermarket movement today is not there. Blue Trader, sorry, may I know your name? I suppose it's not market structure. No, it's trader. Franco, Euro odd. It's Lee. Euro odd. Have we looked at that? We've looked at that, haven't we? It's an ADR. Was it a weekly range? Yeah, we've looked at that. It's a weekly range. Done it. Okay, so Dow's just broken to the downside. I don't know. That's the momentum. That's where I'm going. Marco, can we check XTI? No, because I haven't got it. But I can check WTI. It's going up. Franco, you're playing dice. What are you playing dice? 6. Yahtzee. Oil. I'm trying to get in. I'm waiting to get in. I can't because it's not going in. It's not pulling back. I can't get a pullback. I'm not going to long it here. That's nuts. So I'm waiting for a pullback. It's not doing it. $83 a barrel is your target. 83.5, which we're not far away from now. 83.3. Tick strike on. That was weird. I just heard tick strike. I think I just had a weird moment then. I just suddenly saw the NASDAQ push down really hard, and I heard tick strike in my head. I heard tick, 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 tick going on in the back of my head. That was really weird. I had to check that. Turned off. I heard it. That's weird, isn't it? Subconsciously, my brain is tick striking when I see a candle move. I've been doing this too long. Really throwing me out, that excuse me. So yeah, oil pushing up, waiting for a pullback to get in long up to 83 a barrel. I can't get in, so I'm going to watch price at 83, and then maybe look to get in short. But at the moment, it's within reach today, 125 ADR. So 3:30 this afternoon, we've got crude oil inventories coming out. So when crude comes out this afternoon, we may well get a rally. If we get a rally up into 83, that's a good looking sell. So that's one to watch this afternoon. The potential pullback on this move is huge. So even if we just do a 38 retracement, we're coming back down into here. That's about 300 ADR to the downside. Big potential move on the cards for oil at some point, but not right now. It's just grinding. Dow's out the lows. Dax is just not stopping, not going anywhere. We are now 45 minutes sideways. Dow downside target is yesterday's low, which is not far away, 35,576, which will be $600. So likelihood is spending an entire hour to 2 hours this morning making $600. Not particularly exciting. Right, RSIs. So all the 14s, this is the problem. If you flick over to the 14 RSI too soon, you get this thing lit up like a Christmas tree and it gives you way too many false signals. So I'm not going to focus on the 14 today. This is here so that we can monitor the strength of the 21 and then look at whether or not there's opportunities on the 14 because it's going into summer trading months. So I'm going to focus on the 21s, which are on the right-hand side, because that's obviously what I'm actually currently trading. Euro Swiss is pushing up into propulsion. So overall target on this is here. This accumulation break is where we're going to come and retest probably at some point, assuming we get a continuation on this euro. However, I'm probably going to take this off today. If we get anywhere near ADR, that's last week's high. This is a big accumulation. So we had an accumulation, price discovery, back into balance, price discovery, failed. We're going to go back into potential balance here. So I want to get out somewhere in here. This is actually flying this morning, isn't it? So I just want to watch this and keep an eye on it. I don't want this profit to disappear this time because this will be, there's 2 days basically I had the out and didn't take it. I'm taking it today. What I get will be what I get. But it's going pretty well at the moment. So I'm going to leave it for the minute to see if we can get some kind of hit on ADR. Swiss PMIs just come out as negative. That's why that's pushing. So we've just had the PMIs for Switzerland come out negative. Obviously, we're trading the Swiss franc, so the euro is pushing against the Swiss. You'll probably find, oh, wow. Swiss consumer confidence is also down. You probably find everything is actually dropping again, pushing against the Swiss franc. There you go. So negative news on the Swissy. So that's why we're getting this rally. Propulsion gaps filled. Okay, so that one's done. Next target to the upside is here. Right, RSIs. After the US credit downgrade, do you think we could see the same in other economic areas? The market's been bearish on the US dollar for absolutely ages. Apart from the euro. Sorry, yeah, no, that's right. The euro's been bullish, obviously, so US dollar's been bearish. As you can see, you know, it's no surprise the downgrade, is it? US dollar's not doing well, hasn't been doing well for a long time. So every piece of positive news we get is neutral. Every piece of negative news collapses the currency. Pound New Zealand 125 ADR. So yeah, I'm not surprised, but everything will start to roll over. Everything will become. The thing is, with at the moment, if you look at the buyer scorecard, we're starting to get into the realms of things getting up into double figures now. We haven't had this for probably 4 or 5 months. We've been very, very, very range bound on every single currency. We're starting to get things now which are showing signs of euros still got room to go, Australian dollars screwing it up. Things are getting economically a little bit more like they used to be. So we should possibly be starting to pay a little bit more attention to this moving forward. But we are hitting terminal rates on interest rates across the world as well. So as we're getting some currencies starting to topple over, the other ones that haven't quite got to their peaks yet will be hitting their peaks and starting to topple over. So we may have a period of a month or two where things start to get a little bit stretched, but then they'll all come back into alignment and everything will go back into ranges again as the economies all start to come back down again. So it's the currencies all start to come back down again. So I think this is just, we're seeing the peak in the oscillation, but everything's coming down at the same time. Everything's been going up at the same time. Everything's going to come down at the same time. Look at the fundamentals. Yeah. We've all gone from zeros to fives, fours. Now we're all going to go from fives and fours back down to probably ones. Yeah, but we're all going to do it at the same time. So if everything's moving in equilibrium in one direction, you get ranges. And if everything peaks at the same time, you get equilibrium in ranges. If everything drops at the same time, you get equilibrium in ranges. When you've got the US dollar putting its interest rates up like crazy and the pound dropping its interest rates like crazy, you get a massive stretch push to the upside, a rally, a trend. Yeah, so I don't think any of that's going to make any difference. Dow's collapsing to the downside. Dax probably doing this. Well, I say collapsing. I wouldn't call that a collapse, would you? Here we go. Starting now. TP $600. I'm out of the Dow. I'll take that this morning. Very tricky. Okay, so DAX looking to break to the downside. Dow and the NASDAQ all collapsing. S&P, NASDAQ all dropping. So big sell-off coming, sector sell-off happening at the moment across all sectors. So DAX is the only one at the moment that isn't really getting any interest. I'm assuming we may have just had an earnings report come out. That could have been Kraft. I don't know why I haven't seen any of these coming on the feed. It's a bit weird. I don't know whether they're late or something. No. Anyway, market selling off. So watch the DAX for a short break today. Very strong sell-off. If we do get that low broken, there's nothing but clear air. So watch for the break short today. We could get a decent run. Indices look like they want to go the US. So pound Swiss ADR. So that's that Swiss franc move. Euro Swiss, I assume, is still pushing a little bit more. I'm going to close the Euro Swiss. Do it this way, it's easier. Okay, out Euro Swiss, it's 1.3%. That brings me up to 1.87 on the week. Propulsion gaps filled. We've got potential resistance coming up at ADR. I could have held out for a little bit more, possibly on it. And obviously there is the potential for it to go all the way up to there. But I'm not convinced at the moment. This move on the Swiss franc has been caused by news, and equally news can be undone as fast as it happens. So I don't want to, I've been gifted on a plate the Swiss franc news. So taking it. 1.3. Just post that because there's some people in Telegram. A minute. Wait a sec. Hey, you're seeing behind the scenes here. This is what I do when you see me in Telegram doing this. This is my art. There we go. Right, RSIs. So Aussie dollar CAD. So we're going to see a lot of the same things coming up on RSIs as we are on the weeklies and the ADRs, because obviously RSIs are getting extended as the intraday movement is getting extended. So Aussie dollar CAD, that's just below the 30 level. Potential long opportunity on that. There's a pretty good support here as well. So, God, this is looking good as well, isn't it? So that's monthly low, previous month's low. This is last month's low. So we've come through last month's low, tapped straight into the previous month. Lots of upside targets here, unfilled, look, that we are likely to want to get back to at some point. Pretty much the same as this move here. Obviously a little bit more contracted, but obviously, as you can see, all the propulsion gaps to the upside on that one filled apart from that initial move, which was tested 3 times before it dropped. So that's kind of not there. So pushed all the way up into that propulsion gap. So I think there's a good chance of pushing here. If we go from here, fine. If not, we're going to need to go down there further. So nice extension on RSI. We should be looking for a decent push off of this. I kind of like the look of this Aussie CAD. However, I think I've just taken New Zealand CAD, haven't I? New Zealand Swiss. I'm going to take that as well. Half an ADR is 42. That's a 2-to-1. Okay, so stop under the low, roughly down at ADR. TP is up in that propulsion gap. That's a 2R Aussie CAD. Have a crack at that as well. So like that one as long. Extended, only extended to the 30 though. The Aussie dollar Swiss, very much the same as the New Zealand dollar Swiss. Obviously, we've looked at New Zealand dollar Swiss already. That's extended to the 30. Aussie dollar Swiss, it's just got extended down to there. I didn't quite get into that on the 5-minute reversal alert because when the alert triggered, it's one of those 5-minute reversal alerts that triggered just before the RSI went off. So it went off just before the hour. Didn't quite get the entry on it. Damn, wish I hadn't got out the Dow. Slammed straight through that low. Boom. Got out way too soon. Dax still hasn't got out of its opening range. This is why I'm trading these indices, these US well, I'm only trading the Dow, but I'm trading the US indices in the morning with the Frankfurt session at the moment because it's earnings fortnight. This is what happens in the Globex session during earnings fortnight. This won't happen normally just because it's earnings. But you get movement, a lot of movement pre-market. And I think they've taken the juice out of the DAX, haven't they, today, certainly. So there's some really good moves going on these, but only for this week and last week and possibly next week. Other than that, not going to happen. Aussie dollar Swiss. So that's a nice extension on the hourly. Didn't quite get into it myself, but it is extended. Target would be up there, 130-ish ADR back in that propulsion gap. So look for a push back up into there. Bear in mind, you've just had Swiss franc negative news, which is why this move's happening. The Australian dollar is not powering up. It's the Swiss franc weakening. The Aussie is very weak at the moment. So with this Swiss franc weakness, if they decide actually, yeah, no, we're not going to weaken it, it wasn't that bad, this will pop back down again. So just be careful with this one. It is extended though, so you've got other support coming up. I've got out too soon trauma. There's no support below. Yeah, so if you're getting in here looking for that pullback play, lovely market structure on this, look. Yeah, but there's nothing below. Yeah, so there's no support coming up. So you're going to need to just get in, scale into it, and yeah, get out when it gives you the exits. But beautiful market structure. Look. Push, pull, push, pull, push, pull, push, pull, push, pull, push, pull. As long as it's doing that, you're going to be out every time. Aussie Swiss, that's... Oh, is it the hour? Oh, yeah. All right, hourlies. So Aussie Swiss has just come off of RSI extension. Aussie Yen is extended on just below the 30 level. So this is a 50% retracement on the move. Yens, if anything, Australian dollar is going to go north. This is probably it because it's going to be a very weak yen, I think, moving forward. So this is a good looking entry. You've got two propulsion gaps, but those propulsion gaps are part of a V shape. There's that accumulation. I suppose that one's probably all right, actually. So this would be a good one. First entry, second entry. Long. Euro odd. Very extended to the upside in that one already. First entry off of the RSI extension. We're extended again. Divergence. Well, actually, it's not divergence, is it really? But we're more flat there than we are obviously rallying. So good divergence short. Target down in that propulsion. That's extended beyond the 75 level now. Euro New Zealand is extended as well. Short on that one. Target back down there. We've looked at this already because it's an ADR. Pound odd extended, not quite up to the 75. So we're up basically here. Yeah. Yeah, just waiting for that. Again, if you want a lesson in market structure, low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Doesn't get more textbook than that, does it? So pull back into propulsion. Pound New Zealand, same thing, same pair. Trade one or the other. Market structure is exactly the same. It's just weaker. Yeah. So instead of going like that, we're going like that. But channel's the same. And New Zealand US is your other extension. To the downside. Beautiful wicks to the downside there. Lovely rejection there. But again, we've got 3 days of US dollar news this afternoon, tomorrow, and Friday. 3 big days of news coming on the US dollar. So right now, this is looking like a beautiful long. 1:15 this afternoon. This could go absolutely anywhere, couldn't it? So we'll see what happens this afternoon on it. Tomorrow, we got the Swiss franc CPI figures. I'm wondering if we're not going to get the figures we're expecting on the CPI tomorrow. With that Swissy. So we might get some weakness in the euro tomorrow as well. So yeah, news-wise, it's nuts the next 2 days. There's your RSIs, all done. Afternoon, Gordy. AZ, haven't learnt nearly as much fundamental analysis as I have technical analysis. Other than baby pips, are there any other resources you suggest for fundamental analysis? Not free. If you want to learn fundamentals, me, but I'm not as as in depth. But Anton Creel is the master of fundamentals. If you want to learn proper fundamentals, Anton Creel's course is the one to do. It's a couple of grand though. He's got a lot of free stuff on YouTube, but the course is very, very, very in depth and very good. But all you need to know is what drives the market and its fundamentals. So from a long-term perspective, if you just go with the buyer scorecard on my website, which is all free, this will give you a directional bias of what you would expect to happen over the next month to 3 months. The thing you've got to understand about fundamentals, fundamentals, if you use the buyer scorecard, which gives you a fundamental scorecarding of that instrument, and you use the COT report, which gives you the long-term outlook from the futures market perspective. Those two coupled together, and that's why COT is in here. So COT is part of the fundamental scorecard. Yeah. So the fundamentals give a currency an advantage or disadvantage over another currency. The weighting of the futures market, longs and shorts, which are the non-hedging participants, the speculative participants, gives you, non-commercials they're called, gives you an advantage long or short. And retail, from a short-term perspective, gives you an advantage long or short. This will swing from day to day, week to week, though. This will stay the same, usually from month to month. This changes when we get news events. This changes on an intra-week basis. So all of that together gives you an overall look at the next 4 to 12 weeks. So when you're looking at fundamentals, if you're trading on the 5-minute chart using a stop loss, doesn't help you. Yeah. Anton Creel is an investment banker, and he teaches swing, long-term swing trading. Yeah. Based on fundamentals. That's not me. That's not what I do. However, if I'm going to take a position which may last for a week or two, I'd rather be in line with the way that I think the market's going to go. But as we've seen, the market will do what the hell the market wants. And this is the thing with fundamentals. You may be fundamentally positioned in one direction today. I'm long the pound at the moment. Tomorrow, I have no idea what I'm going to be. If this comes out at 5 tomorrow for any reason, I'm going to go short the pound. But overall, do I want to be short the pound long term? Or do I want to be short the pound for the next few days and then flip back long again? Because we've still got massive inflation and we still need to put the interest rates up. Just because Bank of England may decide tomorrow not to do it this month, they will be doing it over the next 2 months. So the outlook is still bullish. Short term, though, it might be bearish. Yeah. So fundamentals give you kind of the bird's eye top-down view of the market. But if you're trading the 4-hour, hour, and 5-minute charts, this thing's going to go up and down all day long. The pound is a long. It's been a long for ages. If you have a look at the pound US dollar over the last week or 2 weeks, really, yeah, it's not bullish at all, is it? Yeah. Fundamentally, massively bullish. Fundamentally, neutral to bearish. Last 2 weeks, pound's been caned by the US dollar. Not because the US dollar's strong, not particularly because the US dollar's weak, just because over the last couple of weeks, the bias has shifted with news on the US dollar to make it a little bit stronger than it was. And we haven't had a peep out of Bailey for 2 weeks. And we had a negative CPI figure, which was short-term bearish pound. Yeah, but when that CPI figure comes out next month and it's as expected or slightly up, and our interest rates have gone up by 0.25%, that's going up there. If those news events happen as expected. But this is the whole purpose of news. We have no clue which way news is going to go. if this finger comes out as a massive positive or a massive negative this afternoon, the market might flatline and do absolutely nothing about it because it's not worried about that and it's waiting for this. However, they may be waiting for a clue as to this and using that to put their initial orders in today. We don't know that because we don't work in the banks. We have no control. We can't see the future. Therefore, it makes no difference to us whether we know or understand what's working in here or not. The market goes up, the market goes down, and it moves through time. What it does is nothing to do with us. Our job is to get on board and get off when there's a positive figure in our P&L. So do you need to really go into Anton Kriel's course and spend 3 months of your life becoming an expert in economics when you're trading the 5-minute and the 1-hour charts? Because it doesn't really make any difference. However, if you want a long-term bias, what I've learned from Anton is there. The scorecarding that I learned was 25 different items. I've got rid of a lot of those because I've not really seen any point in having something that complex. But then I'm not trading long-term swings. So I don't know. That's my view on it anyway. I don't think you need to know. And if you did know, right, you're still going to get it wrong. If the fundamental bias on the pound US dollar is long for the next 1 to 3 months and you scale into a long position and it goes down to a certain limit and you go, screw this, I've got it really wrong, you're still wrong. Yeah. If I tell you to go long or short, I might be completely wrong, I might be completely right. If you learn a specific way of analyzing the fundamentals in the market and it decides to go down for 4 weeks and you've leveraged yourself incorrectly, you still got to get out of that position. You may be right at some point in the future. You will be, because obviously we know the market structure does this. So at some point you will be right. No different to position trading right now, is it? Except if you've got a massive negative bias on one currency and a massive positive bias on another currency because of interest rates or inflation or something else happening in the world, then ideally you should only take longs, but you're going to miss all the lovely short opportunities. Because during a long, there is a lot of pullbacks. Every pullback is a short opportunity. Yeah. Look at this here. This chart here is a prime example. I shorted it there, and then I longed it there. I did both, and both worked. Doesn't matter, does it? Long-term long, pullback long. Doesn't matter what your bias is, really. It's how you get in and out that's the key. Why a stop in the Aussie CAD? This is a new account I'm trading. Dax is down at the lows, everybody. This is not a position trading account. This is a high risk gambling account. I'm gambling. 2.5% risk at support resistance, looking for 1.5 to 2 hour returns. Looking to double this. Bit of fun with money. So that's not position trading. That's just literally support resistance trading. I was so gutted I got out of this bloody Dax, Dow. That's my entry. That's my exit. That's price. That's my profit. That would have been 3 times bigger if I'd done that. Never mind. Deal with that this afternoon. Could you look at the pound New Zealand? What indicator you use? What indicator you use that could be found for free? Candlesticks. If you can't afford $49 for an indicator, Christian, you can't trade. Just being honest. Michael, can we look at pound New Zealand? Long out the highs at the moment. Our RSI is just starting to get extended on the 4 hour. Hourly, we are up at the 70 level. So I think it's probably due a pullback, but I'd be wary about taking this today ahead of the news tomorrow because we don't know what's going to happen tomorrow. I suspect that we're going to get a decent rally on the pound off of the interest rate increase because that's what the market is expecting, but it's going to come down to what Bailey says. So whatever happens tomorrow, that is the news event that's going to drive the market tomorrow at 12:30 when Bailey speaks. So Bailey is going to wrap up why we have done this, whatever this may be. And then he's going to tell us what the plans are moving forward. And that is what the market wants to hear, because if they are going to put interest rates up twice more to potentially 0.75, then the market will start buying the pound because it will get good interest out of it. If he gives a sort of dovish outlook and it's not sure as to whether we need to increase interest rates anymore, we'll probably get a drop in the pound. Don't know. But, this is the thing. This is why, as a position trader, you need to be aware of news, because right now, this looks like a good looking mean reversion. And if I was going to get into this with a stop loss now, so looking at this from a stop loss perspective on the pound New Zealand, what I would do if I was going to take this short is I would be waiting for the next reversal alert on the 5-minute time frame there. I would take a short with a stop loss up there. It's a gamble as to whether or not the pound drops or pumps tomorrow, isn't it? So that's a decent entry. We're up at 125 ADR. RSI is extended above the 30 level on the hourly. We've had a big push. We've had negative news. There's a great big target there for the market to come and retest on the New Zealand dollar. So that looks like a good looking short opportunity. However, it's completely out of everybody's hands, because tomorrow Bailey is going to make this go up or down. Nothing else matters. Technicals have nothing to do with anything when the fundamentals are being announced, because if you've got a beautiful resistance that we've bounced off 5 times before, and you get to that point and somebody announces an interest rate higher than expected, that resistance means absolutely nothing, because every bank in the world is going to buy the pound. Makes no difference, does it? So it's a great looking short opportunity, and you could get a whacking great profit out of that tomorrow. But it's what happens tomorrow. So, right now, hourly, half an ADR is 100 on this. So TP would need to be minimum of 1.5 R. But as it's a news event, let's go for 2.5. Sell stop under that last candle. Yeah, so sell stop in there. Stop's a decent move distance away, half an ADR. So if that triggers, we need at least half an ADR's movement today ahead of the news to get us out of this trade with a loss. Unlikely to happen. Breathing room. If it does work out, it's easy to get a 150 ADR hit tomorrow, isn't it? When the news event comes out, if the news goes our way. Yeah. So that entry I've just put in there is pretty much a 15-minute reversal alert, and it's a 5-minute reversal alert. So when I'm trading support resistance levels, what I always do is I always use the hourly. And all I'm doing is putting a pending order under the previous low of the candle. Yeah, so the sell stop last. Because for price to get from there to there, I know that on the 5-minute time frame, we have to have had a reversal alert. Yeah, I don't have to see the reversal alert. I just know that putting a pending under that hourly low means that within that hour, we've got to have a reversal alert. So, this is what I'm saying. I don't need the indicators, because I know what's happening in an hourly candle. I know what's happening on M5 inside that hourly candle. To get from there to there in an hour, you have to do break structure. So basically, I'm taking an M5 reversal alert. So that would be the trade. But what I would also do, if this triggers and we find ourselves down here by the end of day today, I will put a break-even stop on that, and I will probably be stopped out on that. Actually, in fact, I wouldn't do that overnight, because it's New Zealand dollar pair. They will spread the crap out of this tonight and take everybody out ahead of the news. So if we get down to here and we're here tomorrow morning, break even on it. Worst case scenario, it pops and I get broken even. Best case scenario, it drops 200 ADR and I make 5 to 10% on my account. Calculated risk. All trading is, if you're using a stop loss, it's calculated risk. Your reward is always got to be higher than your risk. And use your head. If something isn't going anywhere after 2 days, get out. It's not worked, is it? If this is a resistance bounce, as it has been before, Resistance bounces don't hang around. Yeah, we pushed up, we broke that high, we pushed back down, we went into balance and we dropped. We came up, we tested that high, we dropped. Yeah, we came up, we tested that high, we dropped. We came up, we tested that high, we dropped. We came up, we tested that high, we dropped. You don't come up, test the high and go, I'll sit around here for 3 days. That happens. It ain't working. What that is an accumulation. This is a wick off. Somewhere down here, there in this case, you've had a wick off spring. After a wick off spring comes an accumulation or symmetrical triangle hold at the high before the break to the upside. So if that happens, it's not working. So what I would expect to see off that triggers is something like that within 12 hours and us to be on our way. If we're not on our way within half a day, scrap it. It's not working. Look at previous price action. Yeah. 5-10 hours or so of thinking about it, and then the guys that started the move add to their positions. You get there, they start the move, they think about it, add to their positions. They get there, they start the move, they think about it, they add to their positions, or they fail. And if they fail, it's an invalidated reversal alert, and off you go the other way. In theory, then what you could do is flip long, because what have you got? A breakout, which should retest that high and go from there upwards. So if that doesn't work out, you stop out, you could flip long and go the other way. As long as you're using a positive risk reward, it doesn't matter, does it? The odds are 50-50 every time you press the button, every time an order triggers. So it doesn't make any difference whether you're right or wrong or what you think. It's down to the market. Look at these. In, out. In, out. In, out. Didn't take that. Didn't take that. Didn't take that because we didn't get RSI extensions, but we did there, we did there, we did there. Range. If I could live in a range-bound market for the rest of my life, I would literally never have to work again. Unfortunately, it doesn't happen like that, does it? But wouldn't that be nice? US dollar yen is still coming down, which is good. DAX has broken the downside. So if you took the ORB long today, that's the Dow. So if you took the ORB long today, you will have triggered the long, flipped short, and you are now short at support. So it's not the fastest break in the world, but it is a break, and there is nothing now until 150 ADR. Sorry, no, 225 ADR. There's nothing until we get back down into here now, because that is a solid break to the upside. No, literally, you might be able to use that 175, but there's nothing there today. However, we've left a wacky great gap in there. So watch this for a sign of a failed break to the downside. If they come back up again, you could, support is not a level, it's an area. Yeah, limits will be entered at the support, but there'll be buyers interested in buying this level because they bought it twice. So watch for a break back above here and the market structure shift. So watch for that kind of price action. If we break that high, be off. Christian, sorry, I want to buy a couple of your indicators, but I heard in the video that you said there's a few indicators you could find in MT4 for free. Oh, there's hundreds of them. Yeah, but I use whatever you want. Everything is on my website that I build and I sell. There's other indicators out there that do similar things, and there's probably free versions of stuff. The only reason I build indicators for myself and sell them is because I make a nice little income out of them as well. And the indicators I've built do what I want them to do. The indicators out there that are other people's, which are either commercial or freebies, just don't do what I want in the way that I want. So I build my own. And that takes a load of time. So I get paid for that time. And I use it as a little income for doing all this. Unfortunately, it doesn't pay the mortgage, which is why I have to do this. Do you think that could be an upthrust to go short? We're talking about the pound New Zealand still. Yeah. Well, it is, isn't it? I mean, it's the reason we're up here today is because the negative news on the New Zealand dollar. So with every push comes a pull. With every pull comes a push. So yeah, I mean, we will pull back on that. We're 125 ADR extended on RSI. So yeah, I would fully expect a pullback on that, which is good looking short opportunity. But you're going against fundamentals. So this could be a breakout in the same way as that was a breakout. In the same way as that was a breakout. Yeah. Market structure has to have a breakout. Otherwise, you can't get market structure going long. It has to have a higher high. Yeah. So we got the high, the low, the higher high, the higher low, the higher high, the higher low, the higher high. What comes next? It's a good looking short. But if this is a breakout on fundamentals and the market really doesn't like the New Zealand dollar, we could get a breakout, accumulation, continuation. This is why we position trade, because I don't know the answer to that question. So if I take that and it works, happy days. If I take that and it does that and it does that, I need to get in again, knowing that they haven't done a profit take on that move yet. So they're more extended, more profit, meaning more of a pullback. Yeah, pullbacks basically are either going to do that or it's not going to do that and it's going to do that, in which case then they haven't done a profit take on that move. So they're going to need to do that. And if they don't do that and it continues up, they haven't done a profit take on that move. You need to do a profit take on that move. Yeah, and this is why the elastic, when I explain in the bootcamp about elastic band theory, typically a pullback is 38 to 50% of the move. So let's call it 50% in this case. Move starts there, moves up to there, that's your 50%. If they don't do the 50% on that leg, the second leg, 50%, comes all the way back down to there. If they don't do it on that leg, then they do another leg up, they need an even bigger pullback to 50%. And if they don't do it on that, and so on and so forth. Yeah, you don't know how many pushes you're going to get before they break structure and come back down the other side. This is what position trading is. If we don't know which one it's going to be, we just take them all until we get it. When we get it, we get out. Euro Swiss. Thought it might be that, wasn't. So thought it might be that, wasn't. Thought it might be that, was, but I didn't get one in there, unfortunately. So thought it might be that, wasn't. Thought it might be that, was. Out. So pound New Zealand, think it might be that. First leg. Is it? I don't know. That's fine. Let's try it. This is what it's all about. And this is what we're using the RSI for, to measure the relative strength. When there's been a relative strength move, there is usually a pullback, profit take. Then we get another relative strength move, and then we get a pullback. So every relative strength move that we take, we expect it to work. If it doesn't work, we then have to scale in on the next leg to wait for the banks to take their profit. And if they don't decide to do it, then we have to wait for their next leg. They put the orders in waves. And at some point, they will then reverse those waves. It's like the tide going in and out. It's the same principle. It's just the elastic band gets more and more stretched. If that tide goes out too far, it comes back in as a tsunami. Yeah, that's what we look. That's the climbing up the stairs, falling down the elevator shaft that I keep talking about. The elevator shaft move is like the US dollar against the yen. Yeah. You keep climbing. Yeah, the more you climb and don't pull back, accumulate, climb, the faster that pullback is. Yeah, stick a fib on it. It's 50%. Yeah, this is a long climb up the stairs, pull down the elevator shaft. Yeah, climbing up the stairs, falling down the elevator shaft, and you never know how long it's going to take, what time. Yeah, once you've fallen down the elevator shaft, you then got to climb back up again. That's what I should call it, shouldn't I? It's not market structure. It's stairs and lifts. That's a much better name, isn't it? Stairs and lifts theory. I'll make it up as I go along. Right. That's all I got for you today. Going to monitor the US yen. This is yen strength coming through at the moment. All yens coming down, which means the yen is strong. US dollar at the minute is also pretty strong. So this shows you how strong this yen is at the moment. Yeah, US dollar is strong at the moment. If the US dollar is coming down against the yen is really in control today. So big strong move on this yen. When the yen starts to weaken, though, because the US dollar is strong, this thing's going to pop back up again. So again, market structure shift, retest, there's your M pattern. So structure will continue down until it stops and wants to continue back up again. Hopefully, that propulsion gap today would be the target. That's your ultimate target. But again, same as I keep saying, stick a fib on it. Shallow pullback, 38. Medium pullback, 50. Deep pullback, 61.8 to 71.9. Yeah, so if this structure is going to go shallow continuation, this propulsion, medium continuation, deep, yeah, propulsion gap. So we're looking for targets around about the pullback levels. Get out, and then whatever it does, if it wants to do that, fine, doesn't matter, does it? But we get out when we've got profit, because we don't know if it's going to bounce at those levels or if it's going to come all the way back down and do an A-shaped recovery. Because we don't know, we need to make sure we get out when we've got profit at some point in the future. Snakes and ladders. Yeah, could call it snakes and ladders. Snakes and ladders strategy. That's a bit kiddie though, isn't it? Hey, this guy's got a really good course on snakes and ladders in trading. Can you imagine the bloke that does the snakes and ladders trading? That's not going to work, is it? It makes total sense, but not very good from a educational perspective. That's like going to babypips.com. That should be babypips.com's version of market structure. They should teach market structure as snakes and ladders, and they should use Renko charts as Duplo block candlesticks, because that's what Renko charts are. They're candlesticks for people that can't read candlesticks. Duplo blocks. Then you progress on to Lego and use proper charts. And then, if you're really good, you go inside the candlesticks and use footprint charts, because useless retail candlesticks don't work. He says sitting on 25% profit last month using useless retail candlesticks. Sorry, Nero. Right, I'm going to leave it there today. You can see what I've got on. Dow and Dax have collapsed today, unfortunately, really annoyingly, because I got out way too soon. But Dax is going short, and you have literally unlimited downside on this. Yeah, when it stops, nobody knows. We are approaching ADR though, so just be aware. Obviously, ADR is literally a couple of candlesticks away, 28 points. Yeah, just be aware when you get down to ADR. Obviously, we may well find we run out of steam. So if you are short, obviously, just, make sure you lock something in. Is market structure different from support and resistance? Price action, yes. Well, price action is depends what you class price action as, but it's all related. This is why I have everything on my chart that I have on my chart. I have support resistance levels drawn by the support resistance propulsion indicator. So the support resistance levels are areas that the prices have moved from. Propulsion gaps are bank orders that have moved away from those price levels. Yeah. And on the way from station A to station B, it will stop at stations, move back. That's market structure. Market structure will often happen at previous areas of support and resistance. It's all related. It's all market. It's just market movement. It's the banks. It's how the banks move the market up and down. What you call it is up to you. Price action is typically candlestick patterns. But it's all the same stuff. Price action is candlestick patterns. So price action at support and resistance, PASR, is price action happening at a support and resistance level, which is a limit order bank limit order triggering, causing a candlestick pattern to form at a previous level the bank sold at, which is all the same. It's all, you've got to put it all together. But even then, none of it works, because everything has a 50-50 shot. When you got down to this support here and you bought it there, your odds were 50-50 as to whether it would either bounce at that level or break that level. And it's broken that level. So none of it makes any sense or helps you in any way, shape or form, because you still can't see into the future. So all you can do is get into a trade at a level and hope that it goes your way. If it does go your way, excellent. If it doesn't go your way, scale into the position and adjust your price accordingly until the market goes your way, and then get out with a profit. Simples. But it will add to your odds of the 50-50 working in your favor if you take trades at logical areas, which is support, resistance, propulsion gaps, and extensions of exhaustion. Yeah, points of exhaustion. Market pushed down for a week solid. It's exhausted. When it's exhausted, it means the banks are overloaded and the banks have to exit the positions to take profit on them. And when they do that in the opposite direction, they have to do the same thing. Sometimes they accumulate and put two legs in. After they put the second leg in, then they will do the move. Yeah. So what we're seeing right now is the profit take on the last month. 50% on that. So it's either going to be a 50% on that. If they don't do that, which they didn't, they just accumulated and went into balance at resistance, pushed up again. Now we're seeing the 50% profit take move on those two legs together. Yeah. The more extended you are, the faster that snapback is. The more you climb up the stairs, the further you have to fall down the elevator shaft. The more stretched the elastic band is, the faster it snaps back. I could use a million analogies. It's all the same stuff. Which means patterns can be unpredictable. Everything is unpredictable. This is a completely random market, driven by 10 banks, all pushing and pulling in different directions at the same time. No one can predict where this thing's going. Not even a bank. If a bank sits there and dumps 10 million into the market, expecting a candlestick to go short, and another bank pumps 25 million into the same instrument at the same time, that bank that expected the candlestick to drop will get it pushed against them, and they will go into a loss, causing a propulsion gap. It's just how it works. Christian, I can't see the FBGs in MT5 that you have in MT4. I don't know. I don't use FBGs. This is an indicator that this is called support resistance propulsion. Yeah, it's on the website here. You're talking ICT terminology. I don't do ICT stuff. I guess that's why Lehman Brothers collapsed. Lehman Brothers collapsed because they over-leveraged, basically. Yeah. Doesn't matter why they collapsed, does it? They just got it wrong. Rogue traders. Any idea why my ADR lines are in completely different places on the DAX to yours? Because you'll have different data. So if your ADR lines are in different places, you'll have pre-market data in your chart, which is different. I haven't got another one, but basically you've got pre-market data, haven't you? So my data starts at 7 a.m. on the DAX. Your data will start at midnight or 1 a.m. And so if your broker put some price candlesticks in like that, 7 a.m., your high of the day will be in a different place to my high of the day. Therefore, your ADR will be in a different place to my ADR. Trade your charts. If mine gets to 125, yours gets to 100, we're both extended. Don't forget these odds that you see on the ADR indicator. Again, there is a 50-50 chance of it going beyond this level. This 23% of the time it exceeds 125 ADR. Yeah. So when you get to 125 ADR, there's a 23% chance of it going further, but there's still a 50-50 shot at that level whether or not it goes up or down, but it could also go sideways. Yeah. So all these are telling you is the market's extended. So ADR is very much the same as RSI. Tells you the same thing. It's extended. So if you haven't got the ADR indicator, if you drop down onto M5 or M15 and use the RSI, you'll find your RSI is extended. The relative strength today has been massive. Therefore, we've hit our average daily range. So don't worry too much. The DAX is a bit of an anomaly because different brokers quote very different prices on it. In FX, you'll find you won't have much different. We did hit ADR on the Euro Swiss straight into resistance. Look, bounced. So there's limit order triggers at the high. That wick is basically the limit orders sitting at that resistance level, which we sold from. So they're adding back in. I got out a little bit too soon on it, and we tapped straight into ADR, and now potentially pulling back, but we'll see. That Swiss franc's really weak today. So why do they call it accumulation? Accumulation of orders. So depends who you listen to, but it's either accumulation, a balance, a range, whatever you want to call it. It's an area where price just goes up and down and up and down. So they are accumulating orders. So what the banks do is they algorithmically execute orders on behalf of their clients. So during the Asian session, it's obviously the most prevalent. It's easier to see the ranges in the Asian session. Yeah, the accumulations. So there's your accumulation in Asia. There's your accumulation in Asia. There's your accumulation in Asia. Accumulation in Asia. Accumulation in Asia. You can't see behind my head. There's accumulation in Asia behind my head. Yeah. So what this is the banks building a book. So they're executing orders on behalf of their customers. So Microsoft will say we need to transfer X euros into X Swiss. Tesla will say the same thing. Ford will say the same thing. And they'll have an order book, basically, where they need to execute X amount of orders. And what the banks will do is they will accumulate orders in that area. And when they've executed all of their orders, long and short, they will be left with either a positive or a negative balance on their books. If they take it long, they will make X dollars. If it goes short, they will lose X dollars. So the propulsion move is to make themselves money. And this is where the speculative trading desks step in and move the market makers. Yeah. And then they cash out of their positions and take profit by selling them because they had to buy to make money. Therefore, to get profit, they have to sell the same order back at a higher price. So then all of a sudden the sales cycle starts. Market structure, buy cycle, profit take, buy cycle, profit take, buy cycle, profit take. Smaller buy cycle, bigger sell cycle, profit take, sell cycle, profit take. Market structure. Just bank orders. You'll see the bank orders in the form of accumulation breaks, range breaks. whatever you want to call them. It's just how the market works, how the market moves. Dennis, thank you for a lot of free knowledge on your YouTube channel. Can you recommend the simplest strategy that I apply for the first year of trading? I don't know. Pick one. If you haven't yet, first thing you need to do is go and watch these videos on the free education. Actually, go to this, up to the top here, right? Not 5 steps. Position Trading Handbook. If you want to save yourself a load of time, get that handbook and watch, read, and follow these steps, basically. Watch all these videos in this order. Yeah. So you do 2.5 hours on the first bit. This bit's about 10 hours. Yeah. Then come in here. And then read all this. And then read all that. And then pick a strategy. And basically, whatever you were going to do, scrap it. Reduce your lot size to 0.02 and press a button at random. And then wait for the market to get into profit and exit the position. That's the best advice I can give you. You're going to spend the next 2 years of your life doing what I tell you not to do in this video. Because that's what everybody does. If you could possibly do what I say in there, you will cut 5 years off of your trading journey, at least. You might even crack it in 2 years. But what you will do is you'll be looking for that. And you won't find it because it doesn't exist. But there is no simple strategy. The simplest strategy to do is to hit the button and wait. Yeah. And watch the boot camp. I can't stress that enough. I hit the button there where I was wrong for 3 weeks. So I just waited to be right and then I got out with 1.5% profit. But the only way you can do this is if you do not get in with what everybody tells you to do. Do not risk 1 to 2% risk on every trade you take. You will just get killed because you cannot predict the future, and everything you try and do in every course you will ever do or every indicator you ever buy will try and get you to predict the future. You can't. In the same way as you can't time travel. I have absolutely no clue whether this will end up there or there in the next 10 hours. No one on the planet does. Not even the banks that move this thing know whether it's going to end up or down. If they did, well, they are billionaires. But if they had the power to do that, you wouldn't have a banking system, would you? You'd have one bloke, which is a multi-trillionaire, and nobody else would have any money. Yeah. You can't predict the future. So the only thing you can do is try and time an entry. And if you get it wrong, adjust your entry price to a level that's more preferential to you and then get out at a later stage. The only way you can do that is by taking multiple trades in a single position on an instrument, whatever the instrument may be. But market structure is God. Price action, support, resistance. So obvious candlestick patterns, which make up breaks in structure in the market, market structure, and relative strength. And understanding what the banks do. Those are what you need to understand. Everything else is just twaddle. Pointless. However many courses you've bought so far, Dennis, I can guarantee you don't know any more than you did the first time you bought a course. Because they all teach you the same thing. They just tell you to do it in a different way. Try and predict the future. You can't. Mine is currently showing 150 ADR on the DAX. I guess your open is here. My open is here. Yeah. So you've got candlesticks there, haven't you? So yours will be a different reading to mine. I don't pay much attention to ADR. Well, I do pay attention to it, but nowhere near as much as I do on FX because it doesn't work in the same way. Stock indices and stock movement don't work in the same way as FX. So don't worry too much about ADR on that. Some trader on Twitter lost a combined 650k trading account from those newbie prop funds. Global Traders Funding. Quite possibly. He lost a combined 650k. Oh, what, in funding? Well, yeah, that's obvious. I lose that a month as well. Well, not that much. It's not about winning every one. It's about winning some of them. Think about it, all right? You spend 500 on a prop account, 100 grand prop account, $500. They ask you to bring back 8,000. So you're spending 500 to bring back 8. What's the risk reward ratio on that? 16 to 1. So prop firm is saying, give us that. And if you can return us a 16 to 1, we'll give you a funded account. If you can return a 16 to 1 the second time round, take the bloody money and run. Because you can't do that in the real world for very long. That's what you do with prop. You buy 5 of them. You pass 2 of them. 1 of them you fail. The one you don't fail is more than 2.5 grand return. Made money. Rinse, repeat. And if you buy 5 prop firm accounts for 250 grand each, you've got 1.5 million to play with there. If you fail 3 of them and you lose 750k, that's fine. You still got 500,000. If you can return 2% on that, you're going to make more money than you did buying those prop evaluations. That's the business model. Sorry, I meant was due for payout from Global Traders Funding, but the firm is unable to pay. Well, I'm not surprised. How did he make 650k? Oh, yeah. I'm not surprised. It's because he's using Global Traders Funding. Yeah, don't use crap prop firms. If you're going to use a prop firm, use a big established prop firm that makes millions a month. There's a list of them on here, on the website. These are the prop firms you should be using because they're established and have been around a long time. Surge Trader, not so much. But all the others have been around for many, many, many years and turn over multi millions a month. So if I was to be paid 650k, they would pay it because they make 20 million plus a month. I don't understand how he could make 650k though. So basically you're saying he's 3x'd an account in a month. That's gambling. I'm not surprised they haven't paid him. Just gambling. But I don't know. I don't know the story. So real knowledge here. My no Lambo or a day in a trader's life. I might do a day in a trader's life, Dennis. But in fact, if you come in here every day, twice a day for 3 hours, you'll see it play out. This is a day in a trader's life. I sit here all day watching my P&L go up and down. And when there's enough green in it, I put it over here. I go spinning. I eat food. I walk the dog. And I watch candlesticks go up and down, and I wait for the P&L to go green. That's the day in a trader's life, a real trader's life. This is the day in a trader's life that's trying to sell you a course. Wouldn't that be nice, having one of those? Trouble is, every time it went wrong, I wouldn't be able to fix it because I couldn't pay for it. So there's no point in having one, is there? I've got a Porsche. Every time that goes into the garage, it costs me £2,000. Yeah. If I had one of those, every time it goes into the garage, it's going to cost me £10,000. Plus, I've got to pay over 100 grand for it. Not interested. Unless I'm going to sell you a course, in which case I'll spend £500. I'll rent one for the day, take a couple of photos, and then you'll buy my course because I've shown you a Lamborghini. Did I ever tell you I'd made money trading to buy that Lamborghini? No. But what's your assumption? I've got a Lamborghini because I sell a trading course. Who's the idiot? Not calling anybody idiots. I'm just saying, think about it. Before you part with any money, think about it. Does the bloke go on YouTube twice a day and show you a green P&L all the time and go, this is what I do every day, this is how I do it, and show you actual proof of something making money? If so, buy his course. If not, just come in here. It's much easier. And I don't sell the course. Do you have funded accounts? Yes, my Forex funds. So I trade with my Forex funds. They're not my main income, and they are hit and miss. So I trade with my Forex funds and I trade with E8. I am also trading at the moment with Top Step on futures. Futures is something I dip in and out of, and it's literally traded with the opening range breakout strategy. So I just literally trade ORBs with it. So, and price action to a certain extent, but yeah, prop. Prop. If you stay around long enough, prop is profitable, but not something I would want to try and pay the mortgage with. It's very nice bunts actually, and it probably, I would imagine I haven't but looked. I'd have to look at the accountant's stuff, but I would imagine I made somewhere around about 20% of my income last year on prop. Not more than that. I could probably survive on it, but I would have to spend a lot more money. It's the same as everything in trading. To make money, you need money. If I wanted to buy 500,000 accounts instead of 100k accounts or 250k accounts, I'd have to double or treble my money that I spend in evaluations. And that's not really something I want to do, because it is, at the end of the day, gambling. You're given a 5% drawdown limit, which is very difficult to stick within, and a 10% overall drawdown limit, which is very hard to maintain. And obviously, as the market designates what you make, you may go for a month and not actually get any progress, in which case then you can't pay your mortgage. So it's not, I would do it, and I would say to do it, but don't try and do it as your sole income, because it will be hit and miss. You'll have stagnation periods. Your P&L in prop will go like this. Yeah. So good month, withdrawal, stagnation, not earning any money, possibly blowing an account or two. Good month, withdrawal, blowing a couple of accounts, back to square one, no earnings during that period, no earnings during that period. Good month, no earnings during that period. Yeah. Drawing out 5 to 10 grand, drawing out 5 to 10 grand, drawing out 5 to 10 grand, not drawing any money out, but still spending 2 or 3 grand on evaluations. That's the business model. You won't keep the account because your strategy will not survive. At some point, it will hit a losing run and you will not survive. Every strategy has stagnation. And stagnation is where they make their money. And they know that not enough people can pass an evaluation stage 1, an evaluation stage 2, and do the same thing as they did there, return a 16R on an account for 3 periods in a row. Strategies don't allow that. Occasionally they will, but most of the time, at some point in here, you're going to hit a 10% drawdown. Unless you're using very, very tiny risk, in which case you're going to take 2 to 3 months, in which case they don't really give a monkey's, because you're never going to make enough money, are you? If it takes you 2 months to get an 8% return on an account, that's 4% a month. Yes, it's 4 grand, and they'll happily pay you 3 grand of that. So your outlay to them is what, 10, 12 grand a year? It's not worth it, is it? You've got to go in hard, you've got to go in fast, and you've got to gamble it. Risk, high risk. What prop's all about. What are your thoughts on the DAX here? Well, we're out the lows. It's flagging at the minute. So there's a flag break short there. But it's not exactly setting me on fire at the minute. If you look at the other indices, we're not really doing a lot at the moment. Yeah, we had that one order go in today. That's it. So I suspect we'll probably just pull back inside the range today. We've got a gap fill to do now. So my bias for the rest of this week, whether I like it or not, is long, because there's a gap fill. So they'll want to come back and fill that gap at some point. It's exhausted now, I think. The play for me is here. Look, pre-market break and initial break. We're 2 hours plus in to the session now. I think we are 2 hours in, aren't we? Yeah, we're 2 hours 30 minutes in. Oh, is that 1.5? I put that at. Yeah, 1.5. So you're pretty much 2 hours in. We haven't gone anywhere. Futures are way better to trade indices. Lowest fees. Well, no, there's no fees in CFDs on my Forex funds, so no, totally opposite. Trade what you like, doesn't matter. I spend more money on fees in futures than I do on my Forex funds. Way more. My futures bill can get up to. I don't know why I'm looking over there. I shut my futures platform down. It's not open. I'm looking at I'm just looking at a blank monitor, thinking, "Where's my futures bill?" It's not there. It's because it's shut. I can spend $200, $300 a day on commissions on full-size contracts in futures. It's free. CFDs, no fees. Depending which prop you use. In my brokerage, there's fees, but they're not as high as futures. This is more expensive, but then in futures you can make more money faster. So that drop from the Dow today that I got out of from there to there was $600. That was 5 contracts. So you make a lot more money a lot faster, but there's a higher commission price. So it's all round, swings and roundabouts. It's all cost of doing business. You can't get away from cost of doing business in trading. There's always a cost somewhere. Would you interpret the pound US dollar 15-minute? So breaks long at the moment. So when we break back above that high, that's a market structure shift back to the upside at support. I'd look to push up into propulsion. So I'm long at the moment. There's my target at that high in that propulsion gap, which we've tested once, twice, 3 times. So that would be where I'd look for resistance. But this is going to move tomorrow. Might move this afternoon. Might move this afternoon. At the moment, we're looking for longs. But that, you know, this is what I say about indicators. And right now, the indicator, the market reversal indicator, is telling me what? What has happened in the past? You're asking me what is going to happen next. I have no clue. Nobody on this planet can tell you what to do here. You can either buy it because you've had an arrow, or you can sell it because you don't believe the arrow. That's your choice. Which of them is right? I can't tell you. Right now, I can tell you that the buyers are in control of this market because the indicator has indicated that the buyers have taken control of the market. What's going to happen in the next candle? I can't tell you who is going to have control, buyers or sellers, because it hasn't happened yet. Right here, everyone was buying. Everyone was buying. Why? Because it was a beautiful trend and everyone was going, oh, I'm making so much money. They bought it and then it collapsed because they couldn't see the future. But when they bought it there, it was an uptrend. When you buy it here, it's a reversal alert long. That's where I think it's going because that's where they sold it from and that's where they will typically go back to. However, if they go down before they go up, yeah, my indicators are great. I love them. I use them every day and I've used them for years and years. And they do a great job of telling me the past. Yeah, but to be able to trade, you have to have a system or a strategy consisting of multiple moving parts, which gives you a condition in the market that's favorable for a reversal or a continuation, and you need a signal indicator to tell you that when that condition is met, the signal tells you that the structure is starting to go in the way that you want it to, and then you need a take profit. Yeah. So you've got to have a system or strategy which is made up of 3 to 5 moving parts to be able to trade. So I use these. Whether this works or not right here, I have no clue, and I never ever have, and I never will do, because I can't see the future. So right now, this is telling me to go long, and it looks like a logical spot for a long, because we've had an accumulation, a price discovery failure, back into an accumulation, and a rally long that got retested. We've retested the retest and it bounced. We're retesting the retest again, but the structure's short at the moment in a downtrend. But is this downtrend part of a pullback long? I don't know the answer to any of those questions. Yeah, because there isn't an indicator that can tell me where this is going next. If there was, I certainly wouldn't share it with you. Neither would anybody else, would they? Because they've invented a time machine, yeah, and it doesn't exist. So basically, all you can do is you can take a position. I took this entry here because I was anticipating a pullback long on that RSI extension. That isn't what the market gave me. So I scaled into a second position here to bring the average price down to a level that was more achievable for me. Yeah, price is now pushed down further. So if it continues to go down any further, I'll add another position to bring my price down to a level that when they make a pullback on that leg, I will exit. Yeah. So the indicator's job is to read a possible thing that may happen in the future. The signal indicator tells me now's the time to have a go at it. If it doesn't work, the signal indicator will tell me to have a go at it later. And if it doesn't work, the signal indicator tells me to have a go at it later. But the signal indicator's job is to show me when the guys that I want to go in my direction have started to make a move. Whether those guys have got enough oomph to push it up, or the guys that are pushing it down are stronger than them, the indicator doesn't know. But it knows that this is a possibility. That is all you have in trading. You have a possibility of price moving up or down through time. Those are the 3 constants. There's nothing else that there is that could possibly help you in any way, shape, or form. So you have to build a system that extracts money out of the market based on unknown probabilities in the future using past price action that will never repeat itself. Anybody still want to do this job? Much easier to become a pilot, a brain surgeon, anything else, yeah? Because at least then you know what you're doing. I haven't got a clue. That's the honest truth. I don't know which way it's going, but I have a system and a strategy that extracts money from price movement. That's it. And it's using all of these indicators to do that. I have no idea whether we are going to go to that propulsion gap, or that propulsion gap. We may even come up to that one, but we might go down and test that one first. That's the dilemma. I have a plan for every possible outcome in the future, but I don't know which one I'm going to need. So all I'm doing is scaling in and adjusting my price based on what I think is coming next. That's the difference. And this is what the banks do, the DCA, yeah, dollar cost averaging, position trading. They get in and they wait, because these trades that I've just taken on this account here, right, are sitting in 1.92% of profit right now. I have no clue if these are all going to make me 7.5% return today, or whether they're all going to make me a minus 7.5% return today. People that are going to make one of these outcomes happen are sitting in banks and institutions around the world now, pressing buttons and placing orders. Nothing I can do about it. So I have to make sure that my risk and my reward are different ratios to allow me to make more profit. And if I can get 50% of those right, I win. But I have nothing here that can tell me which of them I should be doing at all. Yeah. That's the way it works. So that's how I would interpret the pound US dollar, Keith. Hopefully that has helped. I know it hasn't, because I can't be any more helpful than that. But what I can say is that's what you need to do. That's all you can do. Which set file for the OBE is your favorite? I don't have a favorite. The one that works. There isn't one. They all work. They all work to a certain extent. I'm finding at the moment the pre-market. Today's a perfect example of the opposite of what I'm finding. I'm finding at the moment the pre-markets are getting whipsawed a lot. Pre-market breaks. Today, the pre-market was the one you wanted to be on. Same as yesterday, the pre-market was the one you wanted to be on. Look at the NASDAQ yesterday. The pre-market break on the NASDAQ yesterday was unbelievable. Astronomical. No, sorry, it wasn't the, it was the Dow, wasn't it? Yeah. So that was the pre-market opening range break yesterday. There. And then if you took the 5-minute opening range break yesterday, you went long, you got stopped out, you went short, you got stopped out, you just got whipsawed. So I prefer the 5-minute because I would rather, as this morning, not take a trade when I don't think the conditions are right and miss it and wait for the conditions to be right. So there is no right or wrong set file. It's luck. Yeah. Same as everything, same as I've just explained. I don't know whether the best thing to do is to take a pre-market or a 5-minute today. I have to take something. So I take something. Whether it's right or wrong on that day, I flip. Normally I'm on the 5. But every now and again, I'll go back to the 15 pre and I'll go, haha, that's amazing. And I'll make 3 or 4 grand out of it and go, that's amazing. And then I'll lose 2 days on the trot and I'll go back to the 5. It's not the right thing to do, but then I'm manually intervening and trading manually as well. So it's not, there's no right and wrong. They all work. Backtest, what I would suggest is get the opening range breakout, EA, load the set files and backtest them, watch them. It's very much a psychological thing with the opening range breakout. You have to see the ORBs, yeah? So when you're in visual mode, you get to see what happened every day, every opening range break. Yeah, you can see what happens. So when something happens, you have to have this burnt into your retina and go, last time I saw this, that happened. And assume it's going to happen. If it happens, it happens. If it doesn't, it doesn't. There's nothing you can do about it, but you have to know what the possibilities are depending on what you see playing out. And this is just something you figure out over time. But if you want to, go back in time and use the strategy tester to see every break. What happened every time we got a break? That one made you 15 grand that day. If you held it. If you didn't hold it, it made you what it made you. But if you held it, it made you 15 grand. That one took a breakout short. This is not trades. This is just showing me what would have happened on the break so I can visually see very easily the pros and cons of each side of it. But that ORB there made you 1R on the range. If you used half a range, it made you 2R. There's all sorts of ways you can trade it. There's lots of different combinations and none of them are right and none of them are wrong. It's a breakout strategy. Breakouts happen 30% of the time, 80% of the time, 70% of the time. We spend range bound. We spend doing that. Yeah, that's a range. Horrible one. But if you took the pre-market 5 that day or the pre-market 15 that day, you got in short there and you killed it. If you took the 5-minute opening range that break that day, you just sat down here in profit until you stopped out and then it reset itself ready for the New York Open. Which is the best set file to take? That day it was the pre-market 5/15. Other days, like this day, it was the 5-minute opening range break was the best one to take because you got a 6.5R. And what did it do? It went up to yesterday's high, hit limit orders and rejected. Yeah. You need to see this. What happens when we get to yesterday's highs and lows? Why do we use support and resistance? Because there's orders sitting there from yesterday ready to trigger. That's why that bounced, because it hit yesterday's high, the limit orders triggered, the market was exhausted from the rally, and it dropped. You will only know these things if you see it playing out day after day after day. Rallied up into yesterday's high, hit yesterday's high, stopped. Because order flow to the upside got halted by sellers from yesterday. Stopped. Yeah. Just got to see and do and learn and do it. There's no shortcuts to anything in this job. It's just a grind until you get it. My plan for the first year is to break even. That would be an astounding achievement if you can do that. Most people's plan for the first year is to make a lot of money. The reality of 90% of people in the first year is you blow 2 to 3 accounts, maybe more, and then suddenly realize none of this is working. I need to reset myself. And then year 2, if you're lucky enough to find a strategy that actually has half an edge, you might break even. And then what will happen is you'll go on this journey, which is called the 5 steps to becoming profitable. And that is the point where you'll get your eureka moment, and then you'll over leverage and drop back to that level, and then you'll step back up and you'll get to there. That whole cycle takes somewhere between 2 to 5 years, depending on how psychologically prepared you are for losing money over and over and over and over and over again, because that's really what this job is about, continuously getting it wrong. There's not any other job in the world where you get it wrong so much and you keep doing the same thing over and over again. Yeah, if you're a brain surgeon, you cut someone's head open, you accidentally cut into their brain. Would you ever do it again? No. If you take a long, put an order in the market to tell you to stop out and lose 1% of your account, would you do it again? Yes. Over and over and over again. Why? I don't know. We just do, don't we? But that's not what you should be doing. But at some point, you'll get to stage 3, which is the eureka moment, and it says, I get it. I have no control over this. It's totally random, and it doesn't matter what I do. What's going to happen next has got nothing to do with anything that's happened in the past. That's when it suddenly twigs, and you get to this stage where you suddenly go into autopilot and you just start making money. But that process isn't something you can learn. You have to find out what triggers that light bulb in your head. And usually it's doing 4, 5, 6, 7, 8, 9, 10 courses, buying 10 indicators, 20 EAs, monitoring these strategies, following these 5 gurus. And all of a sudden you'll figure out you can't do this because what they do isn't what your brain is wired to do. But you will figure out what you understood there and you will find an edge in the market. But 90% of the people that make money in this market, or 95%, I should say, probably more higher, like 98, aren't doing what the courses teach you. They're doing what the banks do. Yeah. And the banks understand that there is no control that they have, let alone us. How do you expect a retail trader that can't move a candlestick to have control of something that the banks that have multi-billions and still can't guarantee a candlestick's direction are able to make money out of? It's just not possible. So you have to accept defeat to be able to step forward and make the money. And it's a process. You have to go through the process. But that handbook takes you through everything that I have learned in 15 years and outlines what I wish I'd have known, if you like, back then. I'm not the first person that's done this. There's many people have done this before. The people that actually make it in this industry, a lot of them have released similar sorts of things. It's like, why did I do all of this? Why didn't I just do that? Some people get to it really quick. Most of us take a decade. Just the way it is. But you can cut that down by a lot, a massive amount. Don't expect to get a Lambo in the first month. And if you want to break even in the first month, Dennis, there are people that have done it. There are people that have made it in 2 or 3 years. Not many, but there are. It's doable. You've got to be really dedicated and you've got to have the time to put in. That's the problem. People haven't got the time. You've got a job. You can't do this full time. Unless you have got enough money that you don't need a job. And in which case, why are you learning to trade? You've got enough money. You don't need a job. Never ending cycle, isn't it? Just double check the H1M something is being run on RoboTrader. Demo. No, this is Robo Forex, not Robo Trader, Robo Forex. Yes. Aussie CAD moving up. on its way. Very slow move up, but it's moving up. S&P long. You probably said that about half an hour ago. So I'm a bit behind the time. Yeah, off of ADR. They're all longs. There's no reason really why the S&P should be along there, apart from it's hit ADR today. But yeah, I mean, that's support. You can see the support line there. So they're buying up support. Whether or not the sellers that started that move today are going to add back into their positions and create that second leg down, we will find out. But if you take a short in there somewhere, the stop up there, you could TP down there with a positive risk reward. Your YouTube recording is just perfect sound rate, which is not common, is it? I don't know. I've been long from previous signal. I'm thinking of how the EA would have handled both signals. If they failed, I would have waited for a new signal to the downside. So yeah, if you're using the market reversal alerts, are you talking about the opening range breakout EA or the market reversal alerts EA? Obviously, one is position trading, one is scalping. So, but if you're talking, I think you were talking about the pound New Zealand, weren't you? So if you're talking about the pound New Zealand or the pound US or whatever it was, doesn't really matter what it was. But yeah, I mean, position trading is just at its heart dollar cost averaging with a bit of a brain. Yeah, it's not a grid system, which is what most people assume. Yeah, grid systems take trades at set intervals. This is not doing that. This is waiting for market structure, breaks, and strengths on your side. Yeah. Market reversal alerts. Yeah, so if you're position trading, you've gone long. If that doesn't work, look for a level of support or resistance at least a distance away that is not going to kill you. So half an ADR to 3/4 of an ADR. So if you took that alert there long and this trade doesn't work out, yeah, ADR on this is 113. Half an ADR is 57. So call it 60 and 120. So that would be the very closest I would look at taking a second position. That would be somewhere in there would be your second entry. Yeah. So you go long, it doesn't work. So there's your entry. You go long, it drops down, you get a reversal alert on M5 there. You take a second entry, your average drops to there. So now if we hit this propulsion gap, we make that much profit because we don't know if that's going to work. But if that works, we still get out. And if that doesn't work, we look for another one. Average down, get out another target. You just keep going because the banks can't do that forever because they have to take profit on the moves. That's the whole premise of the position trading strategy, is that the banks move in cycles. Always will, always have, cannot do anything else because that's how they make their money. If they don't move in cycles, they cannot make a profit. Therefore, there is no point in having a bank. Therefore, there's no point in having a market. There is no point in this channel. As long as the banks make money, they will move it up and down. As long as they move it up and down, you will get out of your trades. Sometimes, though, they squeeze the crap out of you and it's hideous. Nothing you can do about that either. Just got to live with it. That's the disadvantage of using no stops, squeezes. But that's all covered in the bootcamp anyway. Interestingly enough, a company called back to the future trading prints future trading. What? Interestingly enough, a company called Back to the Future Trading prints future signals on whether price is going up or down at specific times in the day. Okay. So are they saying they've time traveled and they know where price is going? I can put a prediction in the market. I'm going to just read your comment. My plan for the first year was not to blow my account. Everybody's plan is that. Nobody ever realizes it. If you haven't at least blown 3 accounts, you haven't traded. Got to blow multiple accounts to actually understand this thing. It's just the way it works. If you understand how to lose money, you understand how not to lose money. Because if you stop doing the thing that you keep doing every time you blow your account, eventually, by elimination of things that don't work, you will get there. You'll try everything. You'll try martingale. You'll try everything, and eventually you'll go, that don't work. That don't work. That would. It'll all look promising because otherwise you wouldn't try it, but it won't. And you will, but eventually you'll get that one account. And mine was one of my mentors was the guy that turned me from losing into a break even. And I remember my first quarterly statement where I looked at my P&L and went, it's not a loss. That was it. I didn't make any money, but I didn't make a loss. I was about 200 up, and it was like, I haven't lost money. I'm cracking it. And that's the point where you move on to step 4, which is walking on water. And that is the point that knocks you back to step 2. Conscious incompetence, because you go, I've cracked it. Up the leverage, up the risk, use the more aggressive version of what has been not losing you money, and then you go, I get it. What I had that was working is what I need to do. And then you go on to autopilot. It's the journey we all go through. There isn't anybody in trading that hasn't been there at least once, if not multiple times. Yeah, so back to the future trading. Got to look it up, sorry. Back to the future trading. Advanced predictive time trading. Just another indicator somebody's made. It's probably based on Elliott wave theory. ABC. Elliott wave. Rubbish. What's the odds of that hitting that target? And did you notice they give you 2? It could be there or there. Yeah, I know that. It's going to go up or down. Do you use a running stop or a TP on the indices? I use whatever I feel needs to be used. I don't like stops. I use trailing stops when I've got a really decent run on. So when I've got a really decent amount of money, I'll use a trailing stop. TPs, yeah, I use a 2R and a 5R or a 3R, or I use some kind of high reward. But whether it gets to it or not, again, my back testing, I've done tens of thousands of strategy permutation tests on TPs and stops with the opening range breakout strategy. They all work. All of them work at some point. So you can't pick the perfect TP for the day or the stop for the day because you don't know where it's going. So you just have to have a positive. If you use a trailing stop, you will get stopped out because you're putting an order in the market to say to get me out when the market comes down. The market will come down because that's what it does. It goes up and down. So if you use a trailing stop, you will always get stopped. Whether you use a trailing stop behind the last candle or you use a trailing stop a quarter of an ADR or half an ADR, at some point you'll get stopped out. However, it could well have gone up to 3R before it drops you back down to half an R, which is where your stop is. So should you have taken the 3R or the half R? You don't know because you don't know where price is going in the future. So you always have a stop in indices. Indices move and can move fast. If you're using, I am a position trader, so my bread and butter, I don't use a stop. When I'm trading indices, I do use a stop because I'm looking for a fast breakout play. It's just a breakout play. And I have to use a stop because I'm getting in with high risk. I could position trade the indices, but I don't like it because the indices trend a lot. And if the indices are going to trend a lot, you're going to get hurt. You can't position trade a trend, an index trend that is going like that, which they do on a regular basis. So they're just not ideal. Which is why I stick to the position trading mainly. But for prop, ORB is a fantastic strategy. Is that the book map for trading? I do use I don't use Bookmap software, no. I use a piece of software called Jigsaw for futures, which is virtually the same as Bookmap copied Jigsaw, basically. So it's just it makes no difference to the opening range breakout strategy, though. And to be honest, it doesn't make a lot of difference. It's just support and resistance. All Bookmap is support and resistance. You can just see orders in the market, but you don't know if the orders are spoof orders or real orders. So when you get to an order, which is support and resistance, you still don't know if it's going to hold or break. You just have an area to target going up and an area to target for a potential entry. Support and resistance. Which number is the pre-market? Pre-market is 5 or 15 minutes before. So this opening range, this green opening range today, that is your 15-minute pre-market range. But you could also, if you wanted to, use the 5-minute pre-market range. The thing with the pre-market is it either works or it doesn't. That's it. There is two outcomes. You get the reward or you get whipped. And this is why the pre-market is more risky but higher reward. So in prop, I can pass an evaluation on a pre-market break in one session. You take a 1% risk or a 2% risk on a pre-market break, and this thing moves down 4R, you're out, you're done, you passed. Then I've done it. I passed with the DAX in the morning and I passed with the NASDAQ in the afternoon. On E8, I passed an E8 evaluation in the morning and I passed the same second stage evaluation in the afternoon. I was funded by 6 o'clock. High risk, total gamble. But you can. And people do. They still are. People contacting me all the time saying, I've just passed evaluation with the ORB. But you'll have periods where the 15-minute pre-market range will not work for 4 days on the trot and you'll blow the account. But you can't tell which is coming. This is the whole thing. This is what I keep on going on about. The best lesson on YouTube I've had so far. Cool. I haven't visited in England. Don't bother. It's raining all the time. But I promise that when I arrive, I'll invite you to a meet. By accent, I assumed you were from England. I am from England. I can also be from Australia. That was awful, wasn't it? It was terrible. Thanks for subscribing, 3D Vision. Welcome aboard. I bought their software last year and it's not nearly as good as they make it out to be. It's less than 50% accurate. Do you know what, AZ? It's funny that. What do I say in here every single day about 1,000 times? When you press that button, your odds are what? Yeah? When it hits a support resistance level, your odds are what? When you trade with Bookmap or any heat map software that shows you order flow and order levels in the market, and you get to that order flow level, your odds are what? Funny that you found it 50% accurate. And have you just paid $2,000 for that knowledge? I did. I bought Bookmap for $800. Pounds. Bookmap is. Traded with it. It's fantastic. Does it help me? Still, I've got the same odds every time I press the button. I can just see where there's a likelihood. This is the thing. But it's the same as support and resistance. Yeah, the black lines and the purple lines drawn on this chart are drawn by the support and resistance propulsion indicator, showing where the weekly and monthly support and resistance areas are. It's bounced at it. So what's next? That or continuation short on this market structure. Yeah, just because it's bounced at that level, whether I can see it as a heat map, an iceberg order, and an order flow area that's worked previously has nothing to do with now. But it does, because I need a way to get into the market. You've got to have a system or a strategy. And these people that use heat mapping software, and me included, I love it. And I love the concept. But it doesn't give me any better advantage than anybody else, because when I get to that level, I am either going to be going that way with the banks, and if the banks that go that way have got more money, I'm going to win, and if the banks that go that way with me have got less money, they're going to lose. I'm going to lose. There's still no better odds, is there? Still a bloody good bit of kit, though. For trading futures, it's the pinnacle. Bookmap and Jigsaw. Jigsaw, I would say, better. This is why I trialed Bookmap and I trialed Jigsaw, and Jigsaw is head and shoulders above Bookmap, in my opinion. But the ladder's better. The other stuff Jigsaw does is way better than Bookmap. Bookmap is good at heat mapping. Heat maps in the same way. Visually, it's slightly different, but Jigsaw's got way better charting. The ladder is better. The order execution is better. The automated order is better. Everything's better. Slightly. Not a lot. Doesn't make me any more profitable, but it's just nice and easy. I prefer it. The idea is they data mine the times of day when price has been moving up or down. Oh, you're talking about the other software, that other thing. Right, okay. They data mine the times of day when price has moved up or down in the past and forward print it. Well, how's that help? I've got a folder here, right, with every single open on the DAX for 2 years. I don't know what day this is. 15th of June. What has that, what it did that day, what has that got to do with what it's going to do today? All it's doing is amalgamating what happened in the past and averaging it. Yeah. So on average, it goes up to there. But if it goes to there and then comes down, you miss it. So what have you got to do? Take it exactly that area, take it above the area, below the area, around the area, in which case then what are your odds of that working? Oh, everything in this industry is designed to get you to buy something that does the same thing as everything else. And I've done a video on it on my YouTube channel. So what that's doing is predicting the future by painting a line. A1 Trading do that as well. There's a company called A1 Trading, and they do scorecarding system, a bit similar to the one that's free on my website. They do a version, and you have to pay £200 a month or $200 a month for it. Same thing, pretty much. But they have this thing on there where basically you can look at any chart, and based on what the bias is, it will draw a line with a pitchfork, right? To say price is here. Yeah. And it will draw a line and it will predict in the future if price goes up, it could go to here, here, or here. Really? You're telling me that from where we are right now, price could go up to here, here, or here? Jesus. That's the missing link, isn't it? It could go to one of these places if it goes up. And it will also draw a pitchfork down saying that if it goes down, it could go down to one of the... Really? You mean if it doesn't stay where it is and flatline for the rest of its life, it's going to go up or down to one of those 6 levels? Jesus. Here's my money. Seriously. All a load of crap. All of it. I'm only cynical because I've bought it all in the past and I know it's all a load of crap. I'm just trying to save you like buying it. Why didn't I find me 2 years ago? Because, I don't know. If you want to go back to 2 years ago, go on the YouTube channel. There is a stream from 2 years ago. I'll probably sound a lot younger and I'll have a lot less wrinkles. In fact, I wasn't actually on the screen then. That was just my voice. What's your schedule? So 7:50 in the morning, 2:20 in the afternoon, UK time. It's all on the website. There's links going along the bottom to the website. So just, it's all up there on the live room. This is changing next week, though. I'm going 3 days a week next week. Why is this video unavailable? That should be the live room. I'll have to look at that. But yeah, basically 7:50 a.m., 2:50 New York, 2:20 p.m., 9:20 New York. However, this is now going to change next week to Monday, Wednesday, Friday, just for the summer. And then I'll see how that goes. I might continue just doing 3 a week, because to be honest, I come in here and I say the same thing every single day. And a lot of the setups and the trades that I'm in are so many days, and the RSI extensions are the same every day. And I say the same thing in the morning session as I do in the afternoon session. So to be honest, you don't need 5 days a week. As long as you've done the boot camp, you can follow along. And I post everything in Telegram as well. When I'm closing stuff out, I post it all in Telegram. So you don't really need me 5 days a week. And it gives me 2 days a week to do more analysis, which is what I want to do. I want to spend more time developing and extending the systems. But that's not what I do, because I spend all my time in here. You would have saved me a lot of money if I found you 2 years ago. Yeah, exactly. That's why I do it, because I would have saved myself a lot of money. There's 3 people that made a massive impact on my life. One of them I paid for a course. 2 of them did it for free. I learned more from those people that did it for free than I did from anybody I've ever bought a course from, apart from Kunal Desai, who runs Bulls on Wall Street. He's where I started trading. And Kunal is an amazing scalper, an amazing trader. But stocks weren't for me. I learned how to trade stocks, and I learned how the stock market worked in intricate detail. And he taught me an absolute bucket load. But none of what he does uses a stop loss. And that was one of the first guys, probably 13 years, 14 years ago, that taught me and mentored me. And he didn't use a stop loss. So then I went off for a decade trying every stop loss strategy under the sun. If I'd have known what I know now when I was listening to Kunal, I would have just gone the route I am now. But I didn't. And it took 2 other people to drag me back, kicking and screaming, back to what Kunal told me. And those guys did it for free. So that's why I'm here. 3 days a week indefinitely. Yeah, maybe. Yeah. Think about it, Tom, though. You don't need me every day. I come in here every day and I spout the same stuff, right? I come in here and we go, let's have a look at the ADR dashboard. Aussie New Zealand is extended on ADR. And I sound like this all the time because this is what I do every day. I go and look at this. And if this is lit up, I go, that's an opportunity to go the opposite direction to whatever it's doing right now. Because if it's pushed that way, it's likely to come back this way. And then we move over to the RSI dashboard and I go, the RSIs are extended over here. They've only just got extended. I prefer it when it's over 75.25. There's nothing up there at the moment, so I'm not taking any trades. Anyway, I don't take trades because the market reversal alerts EA sits on my VPS and does it all on autopilot for me. All I do is come in here every day and look at my P&L and go, anything green I can bank? You don't need me to tell you that 5 times a week, twice a day. That's literally all I do, 5 times a week, twice a day. That cycle. You can do that all yourself. And I'm in Telegram if anybody's got any questions all the time, because I'm always sitting here watching this P&L. So 3 days a week, I think, is probably enough. And that's why I'm going to trial it in the summer, because the summer is going to be quiet anyway. The opening range breakout is obviously the only thing that I do. But at the end of the day, it does the same thing. It's the same thing every day on the ORB, isn't it? If you took the pre-market 15, you'd have done that. If you took the pre-market 5, this has happened. You can see that. It's drawn by the ORB EA on your chart. Whether I get out or not at certain levels, 3 times a week, you'll find out instead of 5. But it's not the end of the day, end of the world if I don't do it every single day. I'll post the ORBs on the days that I'm not in the live room, and you'll still see them. But if you've got the ORB EA, you'll see it anyway because it's on your chart. This guy is the best mentor I've ever seen. His explanation is so clear. Talk funny. Oh, thanks for that. And the most patient guy you will ever meet. Need me 8 days a week? No, you don't. Propulsion. If anybody's got any questions about anything, my Telegram group doesn't get used at all for what I wanted it to be. The idea behind the Telegram group was to have somewhere that people could, first of all, get support with the indicators and the EAs, but more importantly, share charts, look at strategy executions. I'm in this. Where do you think I should get out? Nobody does any of that. Partly because I think probably most of the time when someone says something like that, I say, well, I don't know, because honestly, I don't. But I would get out here or here or here. So I think probably people expect to get an exact answer, which is never something that you can give, because I don't know where it's going. If I did, I'd do it, wouldn't I? Yeah, you can join the Telegram group. Bottom of the screen. In a minute, it will come up. Or go to the website. And it's up in the top of the website. There. And there's links to the website coming in all the time. Chat, there's another one. But I can't, you know, if you're in pound US dollar long right now, right? I'm long. Where's it going to go? I don't know. There or there. If your average is where mine is there, you've got to get out here to make a profit. Or there if you're feeling a bit more, you know, this is the sort of stuff that we can all post in Telegram. Anyone can post in Telegram at any time, and I'll go, if I was you, I'd get out here. But nobody does. They don't share charts. And if they do share charts, they don't put any of the indicators on there. So none of the charts mean anything to the strategies that I show in here. And then I just delete the charts because all they're doing is showing a chart. It's like, or they're showing a P&L. Here's my P&L of the 15 trades I've just taken. They're all green. Well done. Delete. How does that help anybody? I can show you a picture of my P&L. There you go. How does that help you? Doesn't tell you how I achieved it, does it? Doesn't tell you what happened. Just shows you a load of green figures. No point in posting that in the Telegram group. It doesn't help anybody. But that's why nobody talks, because everybody's too scared of me. But that's the way I was taught. I was taught not to spoon feed. I was not spoon fed. So I do not spoon feed. I think if you want to know something, you go and find it out, right? I've spent many hours putting together videos about everything you ever need to know about trading. It's all on there. And every product I've made has got a manual longer than the toilet roll in your toilet right now, but better. Yeah. If you can't be bothered to read this and you come in and ask a question that is answered in here in detail on this page, yeah, it's long because there's a lot of information to know. Yeah. You can't just get one answer and suddenly make a load of money. So if you've read that and you've still got a question, fine. If you ask me a question that's in this, I'm going to send you here. Because you'll learn a lot more reading this and understand it than you will if I answer one question and then it still goes wrong because you didn't do something else. We end up in an endless loop of this doesn't work because this doesn't work because this doesn't work. But that's because you haven't read this and understood anything. You haven't watched this video and understood what it does. I can't help you if you won't put the time in. That's usually my answer, which is probably why nobody talks in Telegram, because everyone's too scared of getting roasted. But hey, roasting works. Worked for me. Dave, also I'd like to know, where is your ripcord? I.e., if a currency... That's a new one. I haven't heard that one before. You see, people are asking questions which actually probably are very, very good, and I'll answer that in a minute. In detail. Laughed when I saw the video of the secret of the daily candle. Premium members only. Simple Forex. Secret of the daily... Oh, right, yeah. Secret of the daily candle. Goes up and down. Daily candles are brilliant. Yeah. They tell you when the market's been up and it's been down. It's amazing information. So somebody could come to me literally at any point and say, on July the 20th, 2023, did it go up or down? And I can go, down. It's that useful. Yesterday it went down. Where's it going today? Answers on a postcard, please. If you know, let me know, because I'd make a load of money out of it. Otherwise, what's that got to do with today? Absolutely nothing, apart from where it ended and it started at the highs and the lows. Yeah, those are important because we know that the price couldn't get above there. And we know that sometimes when it gets to there, it bounces. So if you want an entry level, that and that, you can't go far wrong. Whether it works or not, couldn't tell you. That's the secret of the daily candlestick. Apart from the 3 to 5 push theory, which is actually, and this is Larry Williams's work, this is actually very useful. If you go and look at a chart, prime example here, the market will tend to move in 3 to 5 day cycles. Yeah, so we have a 5-day cycle, a 3-day cycle, a 4-day cycle. We have a 3-ish day cycle there. We have an anomaly of a 6-day cycle there. Yeah, but after 3 to 5 days, typically the market will profit take. 3 days, profit take. 4 days, profit take. 3 days, that was a very tiny little profit take. 6 days, profit take. Yeah. RSI, you will find, will be extended at these points. Yeah. And you will find that everybody that made money in this market in the past or in the future, like Larry Williams, will have come to the same conclusion as I've come to. After it pushes, it pulls. When is it going to push and pull? No idea. Larry Williams made all of his money buying the S&P. When the RSI 7 got low, he bought it. And if it carried on going, he bought it again. And if it carried on going, he bought it again. And he just waited for it to go up and he exited. And he had an exit criteria called FPC, first profitable close. So he would enter an order here. Then it would go down. He would enter an order here. It would go up and it would come down. He'd enter an order. It would go up and it would come down. He would enter an order. It would go up and it would go up. And at that point, that would be the first profitable close of a daily candle he could have, and he would close it. FPC. Very simple strategy. You just keep buying it until it closes in profit. Sound familiar? All the same stuff. All the same stuff as I do. The guys that made money, they're doing that. They're not putting an order in the market to lose a load of cash, because that's just silly. Right, I'll leave it there because it is 11 o'clock, and I'll be back this afternoon at 2:20. We'll have a look at the US markets, see how we're going to get on this afternoon. 1:15, be prepared for non-farm employment. Obviously, that is probably going to move the US dollar when that comes out. It may just be a small one. We very often get actually a small whippy move like that and nothing much. So, but be prepared. If you've got any US dollar trades on, I've just put some exposure on, haven't I? I've got Canadian dollar exposure. I need to change that. I've got Canadian dollar exposure on, so the US may well move with the CAD. So I am slightly exposed on the US on these stock-based trades. So we'll see whether that moves. We'll have a look at it this afternoon when we come back into the live room. Until then, have a good one. If I don't see you this afternoon, 2:20, I'll be back tomorrow morning, 7:50, same time for Frankfurt. And then we'll do the same thing again. So have a good day. I'll be back this afternoon, 2:20. If not, see you in the morning or in Telegram. Have a good one.